This episode is brought to you by Koifin. Koifin is one of the fastest growing platforms for financial data and analytics to research stocks and understand market trends. Imagine a Bloomberg Lite with tons of high quality equity and macro data, a powerful graph engine that can show it all clearly, and a user interface that doesn't look like it was built in the 1990s. If you're an individual investor, research analyst, portfolio manager, or financial advisor, do yourself a favor and check them out. You won't regret it. Sign up for free at koifin.com. That's KOYFIN.com.
Hit it. It's Friday, November 5th, 2021, episode 155. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome to the show Andrew Simon, co-founder of Macro Hive. Then we have Nancy Davis from IVOL come back to give us an update on her ETF, and we ask her about her Bloomberg Game of Thrones ad lib. Finally, it's that time. Not only is it Kuppy's Corners time, but we find out that Patrick can even mess up pronouncing even our most cherished guest's name. And then finally, Patrick Ceresna takes us through talking charts.
And then we end with our segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We got a great show. Lena, hop on. What beer are we drinking this week?
So today we're drinking Banff Avenue Ride or Dry Pilsner.
This is, again, one of mine from our the summer. And this time I actually used the picture. Huddle back mountain there.
When the stakes are high, ride or dry. The dry finish on this refreshing Pilsner will make this your new favorite anytime beer, hopped with Nelson Sauvin, however you pronounce that, hops for a flavorful and unique white grape character.
It's kind of strange. It's not what I expected.
Yeah, it's very light, smooth drinking. Feels very much like an American beer. Tastes like one anyway.
Actually, I disagree a little. It's a little fruitier than I expected. Much like the cover of the Banff mix pack there.
All right. Well, we'll rate at the end of the show. But we actually have an announcement, don't we, Lena?
Yes, we do. So there were lots of requests for Market Huddle merch, and we finally got around to it. So you can find some great goodies at markethuddlemerch.com, or you can go to our website and click on the merch button on the menu, and you'll be redirected to our website.
You know what? I have to say that Huddle on the go, the organic tote bag is like... I'm ordering this
to
thing.
Carry your 6-packs.
No, but the best is you came up with the one liner at the bottom.
Yeah, I did.
Don't Goocher it. I love it. It's the perfect. I love it. I'm ordering everything on.
And all the proceeds will go to our Pissed Up Piggy Bank, correct?
Yes.
Pissed Up Piggy Bank.
I swear we're having one of those.
Yes, we will. As soon as we know for sure that everything's open and people can travel, and we're definitely gonna do it. And it's just gonna make it all the more epic because the piggy bank keeps growing. We've also thrown in there our recent actual sponsorship money, so it's going to be a great party. So let me do our side effects. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include chlamydia, gonorrhea, and type 2 diabetes. Those were good. And listen,
that's awesome, actually.
Yeah, those are good.
All right. Well, let's get to our first interview.
It's our great pleasure to welcome to the show today Andrew Simon, co-founding partner of Macro Hive. Macro Hive is a great website / community. We had the other co-founding member, Bilal Hafiz, on a few months back, and now it's our pleasure to welcome Andrew to the show.
Thank you. Very happy to be here.
So, Andrew, I was expecting you to be English. And
I can be. I can have a fake accent if you need.
Can you really?
Actually, I'm really bad at that, so probably I shouldn't.
So you are based in London. Why don't we get to know you a little bit and go through kind of your career and how you ended up at this spot at Macro Hive today?
Sure. I guess I guess I can start from college, and my background is probably maybe a little bit different. Although from hearing a lot of your former guests, everyone kind of has a pretty interesting story. So for me, I grew up in the suburbs of New York. My parents were, and no one in our family had anything to do with finance. My parents were in the fashion industry. Um, and I don't know, I just got interested in trading stocks or following stocks. And as a young kid, I was always very focused on mathematics. But I just felt like that was something that I wanted to do. And so I went to college at Tulane University in New Orleans. There, I kind of majored in finance and accounting, and I graduated in 1991, which is probably probably um, further back than some of your listeners were born. But it was a very mini recession at the time, and Tulane was a good school, but it wasn't an Ivy League school, and I came out of graduating, and I had very high grades. I should have been able to get a good job, but it was quite a difficult environment. And so initially I struggled a lot. I ended up getting a job at a mid-tier accounting firm in New York. And I did that for about 6 months. And I knew that was not the end game. I knew that I wanted to get on Wall Street. But I figured this was a good way to get in there and kind of make that transition. I didn't know anyone. I had no connections to really do that. So I did that, and I had all these good ideas. As my partner now, Bilal, will know, like I always have a ton of good ideas about how things can be improved. But early stage or entry level jobs in accounting, certainly back then, that was not really the main requirement. It was
right.
more just kind of like shut up and do the job. Which is not always my strong side. So I actually got laid off after tax season. This is 1992. I even remember I collected unemployment insurance, which was certainly an experience. And this is, I think a funny story, which is I actually got my first job in finance through through a newspaper, and obviously. And this isn't like 1950s. This was still like early 90s, and it was kind of like it was a back office job at kind of a small, medium sized bond house, and I kind of enjoyed it. But I knew this was I wanted to do something else, but I did it for about 6 months, and I just kind of got lucky that I went out to a bar one night and saw somebody that I knew from Tulane University, and she told me that she's working in a company called Cantor Fitzgerald.
Okay.
And I just said, okay, that sounds interesting. And she kind of told me, I thought it was a trading job, to be honest. I was very green. And so she said, I can set up an interview. I think one of the desk in FX options may be looking for somebody.
Okay.
Yeah. So I went there, I interviewed. It was this big, scary Italian guy that was there. And I remember I had a giant gold watch. And by the way, a very good friend of mine now. And the interview, I think, went pretty well. And I kind of went back to my desk. And this is probably like a kind of an embarrassing story, is somebody called me from Cantor and said, oh, you got the job. And I'm thinking, and I guess maybe I watched Wall Street or something else. And I'm thinking, don't seem too eager. And I said, let me think about it.
Oh.
I told this story to a friend of mine. It was like, that's very you, but it was like such a terrible idea. So of course I'm thinking, I'm trying to think big. And the guy calls back a half hour later and says, my boss said, if you're not in the office in the next 1 hour, the offer's rescinded. And which was, fair enough. And so obviously I went there, I took the job, but I realized that it's much more, for if people don't know, primarily, and the company's obviously evolved over the years, but they primarily they're brokers between banks, so between bank traders.
Yeah.
So I got the job, and actually they used to call it the sandwich boy, which I was not happy about. I was definitely not happy about. but I learned a lot. It was like some great people there, and it was a very cool experience. But I started kind of actually trying to, and it was trading currency options. So I actually started learning, teaching myself something about it, and I started trying to build some very kind of basic models or frameworks and kind of thinking about how you would price stuff. I started kind of tracking, just for my own benefit, how different banks traded, who was more aggressive. And so this is basically trading volatility for your listeners.
So why don't you explain to people exactly in terms of what Cantor does in terms of, being a middleman or middle kind of party for two big banks that want to trade?
Sure. So how traditionally will work, so a large corporation or a large hedge fund will come to a bank as an example. I mean, it's more dispersed than that, but say they come to the salesperson at the bank and they'll say, I have interest in doing this trade. And then so the option trader at the bank will put a price, they'll take on that risk. So then they'll have a series of different types of risks. And now they have very complicated models to with many different Greeks to really understand how to assess the risk of your kind of derivative exposure, secondary, third as well. And so these banks, say JP Morgan or Citibank, will then realize, and they'll say either they want to make a proactive trade to add to risk, or they may want to look to reduce risk. So they will say, they can ask a broker and say, like Cantor Fitzgerald, and say, I'm looking to buy, say, upside options on Eurodollar in the 3-month area. And I'm looking, it'll give the size as well. And so this could, whatever, it could be $1 billion or €1 billion worth. And so it's up to Cantor to then get market making prices from other banks. So other bank traders will, and in FX options, there's a series of inputs, and those are all basically set either ahead of time or when the trade is made. And then the variable that people trade is volatility.
Right.
And
so you would make markets and you would be like 17 bid at 18 vol.
Exactly. And that 17 bid equivalates to a certain price and premium, and the 18 offer equivalates to a certain price and premium.
So you would be the middle party that would allow these banks to trade within themselves because they didn't want to. JP Morgan's not going to phone Goldman Sachs and want to trade directly. They go through you guys.
That's correct.
Okay.
So what
I just signed, Andrew. Yeah. Just one brief. I wanted to jump in here. In my day, the brokers, they're the Cantors of the world, were some of the most degenerate partiers that I've ever seen. And it was just literally their expense accounts were legendary.
Right.
And it was crazy. Do you have similar experience? Was it like that in your day?
There definitely were stories like that. I'm probably not that much fun. I mean, my only story was like going out and my boss with like some big clients. We went to some super cool, like, whiskey and cigar bar. And that was like my first time ever having a cigar. And I if I didn't throw up that night, I was extremely close. I kind of feel like I probably did. And you're the junior on the desk. You kind of like have to go with it. You can't be the guy that like, doesn't participate.
To me, the part that was always scary about these guys is that they would be brokers, like taking out other brokers, meaning that it was sell side on sell side, and it was just debaucherous. There was no pension funds, and there was no pension funds, and your old dad coming with you. It was just a bunch of young, kind of aggressive type A personalities out with an expense account.
100%. And so you have these kind of real alpha male, extremely outgoing, aggressive brokers often, and then you have the other side, a lot of times, not overly typecasting. There's some very geeky, derivative traders. And it's kind of like, hey, I'll show you a cool world. And
right.
that was a little bit, but it's definitely evolved a lot.
Right. No,
And
it's gotten a lot more
you know,
serious.
and it's different in every market. FX options, I think, was, and I think we did a lot of stuff with more complicated options, you know, complex options. So it was really, these people were super smart. You know, a lot of the more successful people on the desk definitely love to go out, but I think a lot of it, you know, there's a lot more skill, I think, than people often realize.
Okay, so you're there on the at Cantor, but
Yeah.
eventually you realize you want to make the jump and you want to go.
Yeah, so I had a call. I had to sit down with my boss, and he already knew, like, me getting sandwiches, or not saying that people should not do this if they're starting the business. You know, I wasn't happy about it, and so, but I more talked to my boss. I said, listen, and I think you should always, you know, even with the most senior people in a company, like everyone, we're all human, and I think people really respect what, you know, when you talk from your heart and you're not just saying something you think that somebody senior wants to hear. I mean, that's how I've always kind of lived my work life and in general. But you know, I said, listen, I'm being honest. Is I love the opportunity you gave me. I have a lot of fun. I'm definitely learning a lot. I can see everyone here, you know, does extremely well. But I really kind of want to go on the trading side, and which, to be honest, is a very difficult and still a very difficult. It's not your usual path going from a broker to become a trader, as I'm sure you understand.
Right.
So he said, "Listen." I said, "What do you think I would be better at?" And he said, "You know, there's two people in my career that I've come across, to be honest, who I think would be pretty good at either. First guy who ended up becoming, I think he co-ran, he also started Cantor coincidentally and had pretty similar path. I won't say his name, you may not want me to say, but he ended up co-running Asia Goldman, super smart guy, and followed a very similar path, which I'll tell you about. And he said, you. And he said, but listen, like these guys are not going to listen to us and say, oh, hire my sandwich boy. So he said, I'll tell you what, we're going to go, we're going to come up, this guy's going to die here. But because he knows all this is like 100%. And he said, listen, and this is old school, which I think you'll appreciate. He said, listen, that a big partner from this company called Kuppy is coming in for our Christmas party. I'll tell you what, he's also kind of sporty. You like sports, you know, maybe you guys could play squash or something and talk to him. That's your shot. That's my best shot. I actually had myself and this other guy, I think we're probably two of the only people ever make this move. And pick him up at the airport, and you can give him your spiel. And so I kind of did a little bit of information, a little background. And Kuppy was, they were just known as the smartest guys, or one of the smartest guys in trading currency options. They weren't the biggest, but they also were very forward thinking in all these things sound crazy right now, but very forward thinking in how do you assess kind of skew, how do you assess convexity. People mostly were they were just trading, and a lot of these guys came from the floor, which really was, you know, kind of where was something yesterday? Okay, spot moved. Where can I get away with it? You know, where you know, is paper buying? How high can I offer but still get the trade? And these guys started thinking is how do I build a book and position without taking huge underlying directional risk with being long convexity. And it was a thing called, it's like second order derivative now, but it was called Wizu, which there was a guy Wiz that was there. So basically, they would position the book that if volatility went up, the book would get longer vol. So they would benefit from it. And if volatility went down, the book would get shorter vol. And that's usually just being long, more wings than at the money. Okay. Now that cost, it's kind of like having gamma on vol.
Right.
So yeah, so this guy came. I met him at the airport. We did play squash. He won, and to be fair, I didn't let him win because I probably would never go that path. But we had fun. We actually did stay out, I think, till 4 a.m. And at some point during the night, I said, "Listen, you know, I really want to try and come to the, you know, try and come to the trading side. And I told him my background. I said, I basically had a 402 lane and this stuff. And he said, a majority, the firm is started by two former MIT professors. And pretty much a majority of the people there are from MIT. And obviously you're not. And he said, the other thing, and this is just a good, I think it's like an old school Wall Street kind of approach. And I think a few of your guests, including one I'm sure that, I forgot one of the guys that played football, Yale or something.
Darius. Yeah, Darius Dale from.
Yeah, he sounds great, though.
Yeah.
And, a lot of guys played college sports. Did you play college sports? And I said, no, I wrestled pretty seriously in high school, and I just didn't want to do that in college. And I said, I'm a pretty good tennis player, but I definitely didn't. And he's like, listen, I'll be honest with you. It's going to be hard. But I'll set up an interview, and everything at the time, it was a partnership, and every new person coming in, the whole firm was built on people coming through the training program. So you had to go through the training program. They would never hire an outside person. And so I went out there. The only tip the guy said is like, do you know anything about game theory? And I said, I don't really know. He said, buy a book, learn a little bit.
Yeah.
I went out there and I thought I crushed the interview. Clearly I didn't. And I think it was like he had to step away because he kind of recommended me. So it was like even amount of partners. And I was like one of the only ties they ever hired. But I guess, so I moved out to Chicago from New York, and that was amazing, and I was so thankful for everyone who helped me in this, like, changed my trajectory of my career. And, but I definitely realized I came into the office and so you basically would clerk, you go through this training program, and there's like 8 to 12 people. But one of the risks of doing something like this is they basically said less than 50% of the people go through the training program because we don't really know how good you are. And we only want the absolute best after like at least 6 months. So I'm thinking, like, if this doesn't work out, like, I don't really have a lot of options. So I went out there and I said, like, for the first time in my career, like, this is it, like this is my playing for the New York Yankees, or, this is playing for our, I'll make it Edmonton, in the hockey, this was my big chance. And I went out there and I just worked harder than everyone else. And I did the training program. I realized that I really liked it, and I was actually surprisingly fairly good at it. And I guess a lot of times, obviously, that came together. So I went through the training program. You would go down to the Merc, so the CME, and this is, again, trading FX options. And so basically, their traders would be in the different pits. So we initially were Cooper and F, who initially had a partnership with which was a very large Japanese bank, Mitsui, at the time. We then got bought by BNP, which was a French bank. But you have locals in the pits. I'm sure you know this, but for your listeners. And then you have banks, and you have other kind of, and at the time there was a few other, like, very smart, very quanty game theory kind of larger companies. Another, Susquehanna is an example today, and they existed back then. There was another one, O'Connor, which ended up getting bought by Swiss Bank.
Right.
And so I went through this training program, and I just remember finding out, who was the quickest person to ever get through the training program, and how long they got through. And this was actually the guy who ended up going to Goldman. And I think it was like 7 months. And I was great at the trading program, all these trading games, which would happen at the end of the day every day. But just being a general clerk, like, I'm not always the world's most organized person. I always have, everybody's different, but I always have like 3 ideas in my head at all times. So I probably wasn't the best clerk, just like I probably wasn't always the best guy getting sandwiches. But I had a lot of real conversations with traders. And back then, the way the firm kind of worked was they would have traders in Chicago and Philadelphia and say, trading all different products from oil to always derivatives, always options. But say in currency options, we'd have currency option trading in Philadelphia and currency option trading in Chicago. And then you would have an OTC market. And it's different in different markets, but in currency options, the OTC market is multitudes larger than the floor.
Right.
And so they actually had a 24-hour desk. So even though I was single, I moved out to Chicago, I was in my mid-20s, I had a great time, but I kind of figured that the way really to understand what's happening is through the OTC desk and the night desk. So 2 or 3 nights a week, I just stayed till 10 o'clock, and which no one understood. The people there couldn't understand why I was doing that. But I had a small advantage, which my time at Cantor, they interact in the OTC market. So I knew the brokers. I kind of could talk to some of the brokers. So I had some advantage I could add.
Right.
And then I just talked a lot to the people there. And, I think the people there found it quite annoying, to be fair. But this was kind of good advice. I was talking to Bilal the other day, and when we were talking about advice for juniors, and I have this advice for when I was at Cooper Neff, and I have this advice for juniors when I was at JP Morgan, which is you need to do 100% of what is expected of you. You need to do 100% of what your manager and your boss needs to help them succeed and to help make their job easier. And a lot of people take that on board, and I think it's great advice. But then the second side is you need to do that extra 25%. And you need to be prepared for when that opportunity comes up, you're ready. And often when I give this advice to people, they're like, well, I'm only doing these spreadsheets right now. I'll never need to talk to a client, or I'll never need to figure out better how to manage risk. That's not what I'm doing now. That's not part of my job. And I said, it may be someday. You want it to be. So I've always tried to follow that advice, and I've always tried to give that advice to juniors. So hopefully, if your listeners find that useful.
Yep. So you're there at Cooper Neff, and you're now doing extra on terms of the night shift. You're going and watching Asia Open and doing and trying to understand how the whole book of hedging. But eventually, you end up on the sell side, like the full on sell side. Like I guess that was a hybrid. That's almost like a hedge fund you were at. How do you make that next step to?
Yeah. So I'll just give a quick story, which is, so eventually I got through the training program. I got to trading. So Cooper Neff or BNP was one of the bigger traders in the market. So just quickly on that is that you start out in a pit, and actually coincidentally, I started out in one of the smallest pits was the Canadian options pit. And this was like no one went in it. It was for juniors who just came out, but something unique was happening. I think this was like mid-90s, and Quebec was potentially seceding from Canada.
So you were there for the separation vote.
I was there for that. So that was like an amazing experience. And I remember that the guy, my boss, and the head of the co-head of options said, listen, we have no edge. We're only gonna market make. We're only gonna grab bid ask. So I did that for a while, and then I just kind of woke up one morning and I'm just thinking to myself, it was like basically 50-50 at the time.
Yeah, it was close.
It was crazy. And it was like Quebec had like more than 50% of the wealth of the country. And I like, okay, I'm going to put 2 and 2 together. And I'm like, this could be like one of my opportunities in my career. And I said, I tell you what, I may not know which way dollar Canada is going, but I can guarantee you until this, up to the event, that volatility is not coming down.
Right.
So I went down that morning and I just basically bought as many options as I could. And I remember like the other market makers in the pit that worked it for the other banks that were trading. And I just told him, he's like, can you believe how high all this stuff is trading in volatility terms? And I'm like, dude, get out of the pit. That's me. And he's like, no, this is way off from where it is in the OTC market. And I just looked at him. I said, I don't care. Do you really want to be short vol with this going on?
And is the OTC market generally longer vol? right? No,
No, it's same.
It's the same.
Yeah,
Okay.
and I went upstairs. My manager at the time was like, obviously not happy, but throughout that day, and this was just pure luck, volatility explodes, and
because you lifted every offer you could see.
well, I was not anywhere. I think people just started realizing like this is a very big deal, and so obviously everything is based. We weren't really predicting which way it was going, so it was really about making a bet on increase in certainty around a situation.
And it just kept getting more and more uncertain because it was so close, right until the last moment.
Exactly.
So
we ended up.
Did you sell the vol in anticipation of the event, or did you go through the event?
No. We sold vol ahead.
Okay,
and,
good for you.
Yeah, and that worked out amazing, and that was definitely very lucky. But I also would say, like, for your listeners, like, you feel like you got a shot in your career, like you probably get like 3 or 4 of those. And like, if you believe in yourself, I'd say go for it. So that for me, that was like a big opportunity, and it ended up they actually let the guy go who was my manager like 6-9 months later, and actually I ended up becoming like kind of co-running the options. And I said, I'm like, oh, and it was partly because of that I had that vision and I took a chance, and they, and I explained to them it wasn't a random. I really thought through why I thought to do that. But the other thing that they really appreciated was the fact that I really went out of my way to understand the OTC market, even though that wasn't my job.
Right. And so they made you the co-manager of FX Vol. And so you stayed there for how long?
Yeah, so I was there for about 5.5 years.
Oh, for a while. So you're becoming a Chicagoite or Chicagoan.
Actually, I moved to Philly.
Oh, because of the Philadelphia currency options?
The truth is that was where the real headquarters. That's where Cooper and Neff were.
Oh, okay.
Was in Radnor, Pennsylvania, a suburb of Philly. And this was a promotion. And they said, listen, we want you to be next to us. There's a bunch of different, a bunch of different opportunities we're looking at. That we had this integration with closer with BNP, and they also were getting into program trading. There was a bunch of different things.
Okay.
So I moved to Philly for a year, and I'll tell my very quick Philly story, which is on the cover of I love Chicago. I was maybe I also I had a girlfriend for a couple of years. She moved out there, went to Wharton. We broke up. So, it wasn't perfect at the time. And on the cover of the Wall Street Journal, they had an article say culture clash. And it says BNP and Cooper Neff struggling on integration. And it was like Jean-Pierre somebody who said, how do you explain the people in Paris having 3 martini lunches, while the traders in Radnor, Pennsylvania, are eating lunch at their desk? And his exact quote was, "Have you ever been to Radnor, Pennsylvania? You'd also eat lunch at your desk."
How not to ingratiate yourself with the company you just bought.
It wasn't great. It wasn't great. I actually, I always tried having a bit of a global view, obviously, despite the accent. Like we said, I am in London. And I kind of was like, I kind of see both sides. People at Cooper Neff in Philly, obviously, were not happy about it. So there was the integration. A couple guys ended up leaving to go to Goldman. I had an opportunity to then go to Deutsche. If you want me to I was there for 6 years. Should I give a little background on that?
Go kind of quickly through your sell side experience.
Yeah, sure. So quick on the sell side, my one kind of interesting experience, I would say, is that particularly Deutsche was, they hired me to trade FX options on the Eurobook, so European currencies out of New York. But to start, I moved to London for like 2 months, right as it was starting. And I guess my one kind of cool story was, although it didn't really feel that cool at the time, was the fact that this was right during the Russia crisis. So this is like mid-1998. And if people remember, the IMF gave billions of dollars to the Russian government. And to try and kind of help the economy and stabilize the economy. And the currency obviously was depreciating massively, inflation, and I was trading European currencies. And I think like the guy running the whole business was away on a holiday, which wasn't great. And I wasn't even used to being in a big bank. And all of a sudden, this small Russian bank, where covered by a salesperson at Deutsche, started asking me these giant option trades. And I'm like, I think you have the notional all wrong. And he's like, no, I need billions of dollars in these things, which was like way bigger than any trade that would happen in the market. And I just remember the guy's like, what vol would you put on this? And everyone's like, who is that guy? I'm like, I don't know. I'm like, my vol's whatever, 40. And he's like, okay, I'll buy $2 billion. And I'm like, no, you don't understand. And he's like, no, you don't understand. You're done. And I was like,
you thought you'd given him a bad price that it wasn't going to trade.
I mean, I made it high, and I just remember actually going to the broker, and the broker, maybe I sold it at 40 vols, and the broker's like, oh, it's 25 at 29 in vol, like something similar. And I'm like, I'll just buy as much as you can do. And the guy's like, what do you mean? And I'm like, I'm 35 bid. And it's not like a spot. It's like vol. It doesn't happen like that. So I just bought everything in the world. And what happened, well,
did you get your short in or no?
You know what? I also, I put a huge delta on, and actually, like, it worked out amazing.
No, but like, I know the delta, but did you get your vol short back in?
Yes, yeah. And to be honest, the funny story, I'll give you the funny story, which is he comes back again. And what I started realizing is the money that was going into, I think, is that the money that was going in may immediately have been coming out. So then they wanted to go in Swiss, and who knows? Some people speculated went to Swiss banks or something, but And so he asked me again in Swiss. I'm like, holy cow! I just went in there. I paid every bank on the street as much as I can do, and then spot absolutely collapses. And I said, well, "Are we done?" And the guy said, "No, he passed." And thankfully, I just got lucky. Like vol exploded, and that worked out. But that was like a really cool kind of mix of a story between trading and markets and kind of real world kind of geopolitics. And that was like really my first experience kind of in there.
Okay, so Andrew, you some terrific stories about your career on the sell side, and we could go on forever, but we should we probably should talk a little bit about markets. You had many decades of experience in terms of trading different products and things like that. What are you seeing now in terms of just your general opinion about the opportunities out there in today's environment?
Well, listen, I think for me, at least, I always try and, not that I'm always perfect at it, I always try and hopefully get to a point of a 10 out of 10. I try not to overtrade too much. I do always try and read a lot of research, and obviously Macro Hive, that's kind of how it came about. And Bilal had this vision, and when we talked about it, I thought it sounded amazing, and I think you already heard it. He's just a great partner. But for me, I think that in general, I think central banks, they are starting to move, but in developed markets, I think there's just still so much liquidity in the world. And I feel like that maybe not outside the UK, but governments still want to be, central banks and governments still want to be pretty supportive.
Well, even the UK ended up being much more supportive in terms of the central bank than they had previously shown.
Yes. And so again, it's almost like hand in hand, where the government, so the US government is obviously trying to be very proactive, very stimulative, and the UK government is talking about raising, some tax hikes. And I don't know, that could have helped push the Bank of England to go slower. But my general view is, and hopefully it's just built, it's not built on hope, but I do think we're coming, certainly with the news today around the COVID pill, but I do feel like we're transitioning globally, and maybe some parts of the world are transitioning slower, say Asia, where we're learning to live with COVID, and hopefully this will also make everything a lot safer as well. But my view is that this was kind of like almost a war. And, this was a huge shock to people's psyche. And I think one of the results is, we're talking about a lot of people quitting their jobs and starting businesses. I think people want to take chances more. And I think that that's really that and everything happening in the crypto world, everything happening, we talk about it in Macro Hive, where a lot of things that, especially in the service sector, that may take, in technology terms, 5 years for transitions to happen, they probably happened in one. And so I'm very bullish in general.
Yeah. Sorry, I didn't mean to interrupt there. That's something I've heard Stanley Druckenmiller talk about. He said that a lot of these transitions, let's just say towards Zoom and all these work from homes, these were trends that were in place for a long time. And what COVID did was, instead of that trend taking the next decade to occur, it sped it all up into 1 or 2 years. Is that kind of the thinking that you're?
That's 100%. Yeah. I mean, I would say, a few other examples, telemedicine, I mean, it's a small thing, but like if you have an issue and you could, and especially here in the UK, often you would have to go see a doctor. There's a procedural, that takes you away from work, that may take you away from your family. But so that I think can help in many ways around productivity. Right. And that is a multitude of things that could be done virtual. Even just food delivery. At supermarkets now, that very fast transition more towards automated checkout. But there's all this stuff I think that's been fast forwarded. On the Zoom thing, that I hope. I'm very much an in-person kind of person, so I think that there's a lot of benefit for people, maybe not 5 days a week, but people meeting up, and obviously when things are safe, meeting up and having those random interactions, and that can stimulate a lot of interesting ideas. But in general, I think that technology, but just as important, is really around the fact that I think a lot more people are open to taking risks. And when I talk to people, and I'm sure you've heard this as well, often in emerging market countries, their view is, when they talk about America, as an example, they say, what the difference between where I grew up and what you guys have in America is, in America, it's like almost a badge of honor that you failed.
Right.
And imagine how the stimulative that is on the economy. So for me, I think that this hopefully is something that will permeate throughout the world. And I think that's going to happen over the next couple of years. Another core thing is, I think obviously this transition towards green, reducing carbon emissions, which is obviously I'm not the first person to say that, but I don't think I think this will be a long process. I mean, one of my favorite trades, and has been for, I think I put out an idea to buy calls on oil in maybe June or July of 2020, which people thought was crazy at the time. I mean, this was on Brent, but WTI had just, I think a month or two before, had been negative.
Right.
And my view was, the world will come back, but in many ways there'll be some constrictions around supply. Not everyone will be working, especially in but in many ways, as the world comes back, and obviously OPEC had taken a lot of oil off the market, and for me now, I think even if they come back 100%, I think there's such a huge demand, especially issues we've seen in Europe, for energy now, and obviously we will be moving more towards cleaner energy, but in the short term, and I also think people will be flying more, especially if some of the stuff that's come out recently on this COVID pill.
Yeah, like if you think about it, we haven't even opened fully, and we're running out of oil.
And we're running out of oil.
And then the other thing that amazes me is everyone seems to be shitting a brick about $80 oil. And I'm like, deflate that by inflation. Oil is not that expensive.
No, it's really not. And by the way, in the U.S., where taxes are pretty low, like people aren't happy. I guess I haven't been back in like a year, but I think oil, gasoline was $2. Now it's $4. But still, like you live in Europe, like it's a lot more expensive, and it's a much bigger component as part as like a person's family budget.
Yeah.
But I agree, for inflation adjusted, it's not that high.
And then the other thing, I don't mean to interrupt, but the other thing that kind of astounds me is if we want to move to a green economy, wasn't the whole idea of this to get higher oil prices so that it would encourage substitution?
That's my point. I always say that. And I was like, high oil prices is good. That forces people really to make that, carbon decision. Now, like if oil's at $20, it's kind of hard to convince a lot of people, real businesses, utilities, to make that big investment.
Yeah.
When oil's at $80, they're like, well, risk reward. Actually, even if I don't totally care about the economy, about the planet in general, it's just a good business decision. I'm not a total expert, but I'll give a quick plug. I'm personally very bullish on uranium.
Okay.
I think that it really does, especially as we're moving more towards these smaller reactors, because I think one of the issues was to build a large new reactor financially didn't really make sense, even looking over a 10 or 15 year period. But the idea of being able to more cheaply build these smaller reactors, and this is something I think the technology is there, but I'm sure you'll have uranium experts to explain it better than me.
Well, all you have to do is get on to Twitter and check out the yellow laser-eyed guys, and there's tons of experts there.
I don't know which eyes. By the way, I don't even know how you get those laser eyes. If I had one Bitcoin, one uranium, maybe I haven't seen anyone on Twitter do that.
So someone gave me a hard time because I was a big natural gas bull for a long time, and they said we're waiting for Kev to get the natural gas eyes, which I don't even know what they would be.
By the way, you would have looked like a hero. Natural gas was like, I don't know, a year, even 2 or 3 years ago, before the pandemic. So many parts of the U.S. and I know in the hedge fund I had in Florida, in Miami, we own some of these small E&P companies in Canada, and like it wasn't profitable.
Oh yeah,
now people were burning it, and now it's becoming, and also it is a little bit cleaner, and it's obviously in parts of the U.S. it's pretty prevalent. But yeah, you definitely would have been ahead of the curve and looked like, a hero.
So now when you think about oil as an investment right here, do you think are you worried that we're hit a point where sentiment is very stretched? It seems to be that this trade has gone from everyone telling you you're insane for buying those things a year ago to now everyone seems to be owning it. Now, I would argue maybe the long-term big money doesn't own it, but that's another. I'd love to hear your thoughts. And then B, do you worry about there being a policy shift, let's say, in the government? Because to some extent, the reason that oil is doing well is because it is being chosen for us to capital starve many companies. And do you think that we've hit a point where that might actually change?
On the first part, it's absolutely a risk. We've rallied WTI. We've rallied from minus 30 to 80, so that's a pretty big move. But at least for me, I actually prefer to try and express this view through deep out of the money calls, like above 100.
Okay. And so why don't you, because your background is so much options, why don't we talk a little bit about that, about how you're expressing it, what exactly, like, is it listed? Are you using listed products?
Primarily I'll use listed options.
Okay. And so one of the other things is part of the reason that attracts you is also the shape of the curve on the actual WTI?
Yeah, so traditionally the skew, like equities, is for downside. And that is often producers will hedge. So obviously they could sell forward oil futures, or they could sell out of the money calls.
Right.
And then a few large, let's just call them without giving their name, national producers will sell calls in huge amount. So that will depress the skew. So let's say vols are 30 for at the money, maybe a 20 delta, or let's say 10% out of the money for whatever day. That vol could be 2 or 3 vols below. And then the strike, say 10 or 15% below spot. So I don't know, let's say 67 or something. That could be 4 or 5 vols higher. And several national companies do it, 1 or 2 big ones, and they basically buy puts to protect in case spot goes lower, in case the price of oil goes lower, and they're okay if spot goes a lot higher, especially up to that where their strike is. So the skew's already depressed.
Okay, so can I interrupt there? So
Sure.
I understand what you're saying about them affecting the shape of the volatility curve. Are they actually, through those actions, also affecting the shape of the futures curve? Because there has to be a delta associated with that. They're selling tons of calls.
No, there's other reasons. I mean, that's not big enough to affect.
That's they're only affecting.
There's other things like storage costs and stuff like that would be more, but interest rates, other things like that.
But traditionally, we haven't had the far dated trading at this sort of discount.
I think when oil was it was a while ago, but when oil went up to over $100 last time, I'm pretty sure the curve was probably this steep.
Okay. So you think it's just a function of there's so much demand over the short run, but the reason, to me, part of the reason the curve gets steep like that is because before they looked out to the forward and they said, look at all these shale guys, there's going to be supply. To me, it almost seems like the opposite now. We don't have, it's not just a problem over the short run. It's not just a demand problem for the next month or two or year. It's a problem over the long run because we're purposely trying to change habits away from it. Yeah,
I mean, that would be one of my premises.
Right.
So I 100% agree. And shale, and I'm not specifically an oil expert, but the depreciation in the amount of oil that you get out, from my understanding, is pretty fast.
Right.
So in North America, where there's a lot of shale, if there's not a lot of long-term investment, exactly to your point, that price should go higher. And I guess to answer your second question, which kind of dovetails together, is first of all, I don't see the U.S. government or our friends to the north, you guys, as saying, oh, you know what, let's absolutely invest for the next 10, 15 years. We need this even with the transition.
They should, but because the reality is that you need to set up to facilitate this green revolution. You actually need more energy, not less.
Exactly.
So to be cutting back at the same time that you're doing this transition is just asinine. But obviously our politics are similar there in terms of our thinking. Okay, so let's talk about.
It was also, oil was pretty low for a while, so it's not just the government. I think energy companies themselves probably had maybe a combination, longer discussion around corporate short-termism, but they weren't making big investments. And to make, say, deep offshore investments as well, you needed oil pretty high to do that, and it was not very high for a long time, for certainly the last couple of years. So that too probably hurt investment. So all that together.
Okay, so going back to the shape of the vol curve on far dated contracts, even though we've had this issue with less supply in the market, you still think those big companies are out there making those sales and affecting the curve?
First Q, yeah, okay. I think so.
So they're still there.
I haven't checked it recently, but yeah, it's kind of a consistent thing. The only thing I would say is, because there's I guess what people call an inelasticity in an extra 1 or 2 million barrels of demand can often push the price of oil very high,
right,
and have an outsized move. So there is a point deep out of the money, so very low delta, maybe above 105, 110. The skew does those vols will start coming higher. And because that idea would be, if we did get to something like that, that would, and again, vol is based upon how volatile the environment would be if spot got to that level.
Right.
It's
the volatility around that strike, and that's what people have to remember.
100%. So last time when oil went to whatever $140, like, it was volatile, but still traditionally the skew is to the downside, and usually the skew is to the downside for one other reason. Besides, it's mainly because of the supply demand from the big producers. But one of the other reasons is oil is also it's a risk asset, and it's highly correlated to growth in the economy. So if we did enter a potential recession, for example, that could be a reason why oil went down a lot. And if we did that, odds are equities would sell off, general volatility would go higher, and oil would go lower. We would be most likely in a much higher volatile environment.
Right. Okay. So now, though, when we're thinking about how you're thinking about the markets right now,
yeah.
Well, you told me earlier that you said that this is setting up to be positive for risk, and then in general, you're saying that this is. I've been noticing this feels more and more like 1999, and you were obviously in the market, so I think we're about the same vintage, Andrew. So I remember that time very well. One of my things I always like to tell people is that the people that believe that volatility goes down when stocks go up, they always seem to conveniently forget 1999. And I remember that period very well. Volatility went up as stocks went up. Do you think that we're setting up for potentially a 1999 type?
I think that's also like a Stan Druckenmiller maybe potential view as well. I absolutely think that.
And so what are the signs that you think that around you that show that might be happening? And what would you maybe position yourself for to take advantage of that if you did think it was going to occur?
I don't know if I would say that there's tons of signs. I mean, I could tell you, the markets have been strong all year, right? And traditionally, for markets where they are and how the equity market has behaved, volatility should be a lot lower. Somebody was talking about volatility being 15, and I'm like, traditionally, like before the pandemic, if you had pretty much this scenario we've seen this year, I think vols would be, I'm just using the VIX as an example.
Yeah.
But I think the other difference of how all this comes together is also that you have central banks really front and center now. And for the first time in a while, really kind of being questioned in some of their actions, kind of being pushed, how they're going to react to things. You have governments much more stimulus and probably engaging, I think, than we've seen. I just feel like there's a lot more variables. And then obviously I gave you my view about, which I think one of the core things is about the technology advances that we've made in such a short period of time. But, I still think, and, the only difference I would say between now and, which is a whole nother probably conversation, between now and 1999 is you have this thing called crypto. And maybe crypto is maybe that's the 1999.
Okay, so let's go into crypto a little, because I know after reading some of the things that you've talked about, you're let's just say you're less skeptical than your fellow.
I feel like I'm going against some of your other guests. Saying,
no. Listen, we had some guests and stuff, but listen, we're one of the things that we believe very strongly at Market Huddle is that we love hearing all the different sides, and we're open to different ideas. So tell me why I might be wrong, and that this might be still, even though it's gone so far, it might still be a wonderful investment opportunity.
Sure. I mean, I'm not an expert. I've been following it and I bought Bitcoin to $400. By the way, I sold it at $1,500. I thought it was the greatest trade ever. It ended up being one of the worst sales in history.
You lost your hodler cred.
Yeah, exactly. Maybe I shouldn't say that, but for a lot of FX guys, it wasn't that crazy of a transition to go into, say, Bitcoin at the time. I think Dan Moorhead at Pantera, which is a super successful company, and he was running. I think he ran global FX option trading at Deutsche, and left about 3 months before I joined to eventually running European FX options there. But back then, I invested in some accelerators. I saw that I thought something interesting was going on, but my issue was I wasn't sure like it was solving real world problems. And all the guys in Silicon Valley kept saying, this will come, this will happen. This is, just like the internet. And I have to say, back then, I don't know if I totally believed it. I just thought, listen, this is an interesting space. It'd be cool to trade. It's very volatile, which especially kind of like option traders or derivative trader, most traders like. So that's why I kind of focused on it a little bit. But I feel that the transition that's happened in the last couple of years is it's beginning to solve real world problems. And that was kind of what I always was waiting for it to happen around kind of, say, decentralized finance, particularly. For me, I had always thought about the real use case for Bitcoin or, the other earlier one, not earlier one, but around a couple of years after Bitcoin, like Ripple and a few of the others, was around the cross-border payments. And I invested in a couple of companies that use Bitcoin as a more lower cost and a more seamless way to transfer money between countries. But I feel like the difference now is number one, I think it's solving real world problems. Number two is it's actually creating or benefiting from this whole thing, the whole metaverse. And I think, there's a lot of funny jokes obviously going around about Facebook and stuff, but like for me, I think they're amazingly positioned with, the reach they have, the amount of, active users they have. And I think the metaverse, I think what people are doing around decentralized finance, and probably another thing is there's just a lot of really smart people in finance that are really spending a majority of their time on this space. And there's so much money going into it. So yeah, of course it can be a bubble. And as a lot of like my friends who bought Bitcoin at like $10, and have told me over the years, it's it's a series of, and I forgot what the term was, technology adoption waves, and you're going to have that. And listen, Bitcoin and Ethereum, I'm sure will sell off, have a big sell off, but I feel like the general transition of the next 5 to 10 years, you want to be involved. But for me personally, I more have exposure in the kind of decentralized finance space.
And so you're actually trading some of the standard coins, right? Like you've made investments, and I see you
yeah, I mean, for me, I'm trying not to trade it. I'll make an investment and I'll pretty much hold it.
You're going to try to make up for the mistake you made with the Bitcoin.
Yeah, that was a long time ago. But listen, I still had Bitcoin and Ethereum for many years. Ethereum was more that I went to a Ethereum conference in 2016 where Vitalik Buterin was speaking, and I was just kind of blown away by that guy. I don't know if you've heard him.
I think he's a Canadian.
He's an amazing guest to have on.
I think he's a Canadian, is he not? I believe he is.
He is a Canadian. Yeah. He's a Ukrainian Canadian. Yes, exactly.
I actually believe that he might have even been at my squash club or my tennis club type place. That I think he was a member there. He's a young kid. I don't know him very much, but I do believe he was from here.
He's I was incredibly impressed. And what I also like about him is I think he gives a very balanced. He talked about the weaknesses in crypto space. He doesn't kind of glaze over it, and he talks about things that need to be addressed, and he talks about, you know, a long-term vision, and it's not just like, hey, we're the greatest thing in the world and you're a knucklehead if you don't own it.
Right. He's a little more balanced. Very Canadian of him. Okay, so Andrew, why don't we talk a little bit about Macro Hive? Why don't you tell us the story of how you met Bilal, what you guys are trying to do, and kind of give us the whole spiel.
Sure. So when I was at Deutsche, I was trading currency options, but I also kind of took this initiative of building out derivative research. So no one, I mean, this is standard in banks now, but no one really looked at analyzing, you know, pockets of gamma. No one really looked at correlations between different currency pairs. And I came up with some of these, well, along with the other people at Deutsche, trading correlation swaps, more trading vol and variance swaps. These are things which were much more commonplace, like complex derivative trades, vol and correlation trades in equities. And Bilal was running multi-strategy macro research at the time. And so we just kind of became kind of friends. And he's just one of like the most thoughtful, kind of well-balanced, super rigorous thinking people I've met in my life. Maybe we should take that.
No, you gotta leave it.
He's probably heard me say something like that. But and you know, I just felt like in my career, you know, it was years ago that I left Deutsche, and you know, when we were in Florida and I had a few opportunities, my wife kind of wanted to move back to London, and our son was becoming of age, and you know, was working in a few different things, a few venture stuff and stuff, but he was one of the people, 5 or 6 people who I'm like, I'm going to keep in touch with this guy. And he told me that he's like, listen, I'm thinking about starting this idea. So he's like, you know, around Macro Hive. And I want to build this business in a way to leverage all the great stuff that people can do in adding value for the most professional investors, you know, hedge funds, asset manager, pension funds, down to retail. And do it outside of a bank because, and this is nothing against a bank, you just have a lot more flexibility. You have a lot more, you have less of the same compliance issues, less of the issues of, you know, maybe, you know, the connection to trading and risk management positions, and be totally independent. And he said, this is what I want to build. And I also want to build it in a very collaborative way. So I want to build this team, and you know, I was like, Don, let's do it together. And he I thought he'd jump on it, and he more was like, oh, okay, he actually started, even though we hadn't hung out in a while, he actually did speak to a few people who used to work for me or whatever, which was fair enough, because starting a business, it really kind of is like a marriage. And so I kind of really respect it. And I wasn't surprised. He's so thorough in his thinking and his research. So yeah, we said, you know, I moved back to London in June 2019. That's kind of how we launched it. But he really had this idea of making sure it was very collaborative. And there's all these independent researchers, more like one or two man or women type operation, super smart people, either doing macro in general or doing very specific stuff on a specific topic. And he said, let's create this environment in addition to Macro Hive and as part of Macro Hive where people feel comfortable and they want to share ideas. I was always like, let's just charge everyone from the beginning. And and he's like, let's see where it goes. And to be honest, he was right. And it's really, you know, we've been able to build this business. So I guess I could talk quickly about it. You know, we do stuff from, you know, we have an online product called Macro Hive Prime, where we really focus on a variety of macro topics, but it's not for the news. It's really about what's driving markets, which is really what we want to know. And, you know, but the difference, I think, over the last 6, 9, 12 months, and maybe to answer the point about crypto, is we've just moved a lot more into the crypto and never single name equities. That's not our expertise, but we do focus now a bit more on asset allocation thinking and thematic. So like ETF sectors, where you want to be positioned in equities. but we've been building a lot of kind of taking a quantitative approach to crypto, like what's driving, right now we have it for Bitcoin and Ethereum, but we're building out much deeper into the decentralized finance space and even more focused, maybe even what's driving prices on the more kind of metaverse driven tokens or platforms. And that's been really cool because I think a lot of people really appreciate the stuff we're doing, but because we really come from this very sophisticated kind of institutional framework and background, which not everyone always loves, say in the crypto space, but people in the transition of bigger companies moving more into that space, I think they kind of like knowing our kind of our approach in that sense. So that's like our online product, and people can absolutely reach out to me or Bilal. You can sign up through the website. You can test it for a month, and that'd be great. I don't want to make it, appreciate you letting me talk about it. And then we have a professional enterprise offering where hedge funds, asset managers, family offices, private wealth, there it's a much more sophisticated, quantitative approach often, but really with a lot of fundamental research to back it up, and kind of how we're probably different than a lot of the bigger traditional research houses, or we're much more focused on strategy. We're not like, our goal is to take what we believe, take the research that we see and that we understand, and within our framework, and tell you what the trades to do, what we think are the favorite trades. Everything should be around, trading, assessing what risks, which is, for me, is also like super important. And I think for a lot of, especially the most sophisticated, but for everyone, is not just, what are the best trades, but when I have a core trade on, what are the risks? What should I be looking out for? And that I've learned from a lot of the most sophisticated and successful hedge fund people in the world. There's been often this kind of funny mix where, a great researcher comes in and presents to the head of a huge hedge fund, super successful guy. And I've seen this many times, and there's a very kind of heated argument almost. And you come out, and the researcher's like, "I'm really sorry. This is," we'd say it was at JP Morgan. "I'm really sorry that went really bad." And I said, "No, that went amazing." People want
if they're arguing with you, they care.
They want to be challenged.
That's right. If they're arguing with you, they care. Okay, so that's macro.
And I would say the last thing is we work with a bunch of exchanges, which is something that. So a lot of the CME, your friends, the Montreal Exchange, were amazing, by the way. The guys at SGX in Singapore, and they'll often outsource to us to kind of build models, frameworks, helping their clients and their traders kind of maybe better assess where the opportunities are. And that's been a really cool, a cool part of the business.
Okay, so everyone, you can get a month for free. Is that correct? Did I hear that right? Just goes
for the online one. For professional people, contact me directly.
Okay.
And we'll debate about a month free or not.
Okay, and now I'm going to end with the questions I always ask our guests.
Sure.
And we'll start with your favorite investment book.
I would say there's kind of two fairly recent ones, because I think it's I've read recently. One of them is for and by the way, it's not for crypto people who read it. You may not love his conclusion, but I think it's interesting to understand. That's narrative economics.
Okay.
That's a Robert Shiller book, and it's kind of a mix between dry, but it's also, so it really talks about understanding the narrative in an environment we are. So you were talking about, is it 1999? What is going on? What's happening in this huge earth-shaking event over the last kind of 2 years? It is a narrative, and it's a unique narrative, certainly as old as we are. That's something we haven't seen. I highly recommend that book. It's not going to tell you to buy, the S&P to make 20 basis points. But for especially for anybody in the investing game or thinking about getting an investing game, it really helps thinking about things in a good framework, approach, which is frameworks is kind of Bilal's specialty, and I'm stealing that from him.
Okay.
And then the other one is super forecasting. And this kind of speaks to my kind of option, expertise or, background, whatever, which is always thinking about everything in a game theory odds. What are the odds? What do I think the likelihood of something happening? And where do I think that the market may be pricing that wrong? And I love that book. And I mean, silly story out. They basically say, never say 50-50 on something, which, by the way, is something innately I hate when people say anyway. And I've even trying to train my 6-year-old son. We're deciding if it's going to rain tomorrow, and we're guessing on, we're making markets on the chance of it raining tomorrow.
So you got to make it a model on the rain tomorrow. Well, it's easy. You live in London. It's always raining. Okay.
Exactly. I would say 2 other books. These are not really trading as much, but just general books in the markets. I loved The Tower of Basel.
Yeah.
I don't know if you read it or heard.
Nope.
So it's the story of the BIS.
Okay.
And the Bank of International Settlements, and especially the part the discussions that took place between the U.S., UK, Canada, even representatives from the Nazi Germany were all there, and the idea of one of the something that helped the Nazis, which obviously never should have taken place. I forgot it was that they agreed to transfer gold. I think it was either Czechoslovakia or Hungary to Germany, even though because the central bank governor, who was at gunpoint at the time, if I remember the book right, was asked said, "Oh, please transfer." And they said, "Listen, our job is not to get involved in politics. We have a very specific procedure we need to follow. If the head of the central bank asks us to do that, we have to do that." And all the stories about the intersection between geopolitics and finance, I would say it's one of the most interesting books I've ever read.
Oh, that's great. And what's the second one?
The biography of J.P. Morgan.
Okay.
And not just because I was there for many years. He had an incredibly fascinating story.
1 second, Andrew, you were old, but you weren't around when J.P. Morgan was around.
No, I was not. Yeah, I was not. I feel like everyone's. Yeah. Anyway.
Okay.
But it was a fascinating story. It was also I went to go. If people haven't done this, people live in New York. I would go. I think it's 23rd Street and Fifth Avenue. You see the J.P. Morgan Library, which was where they built a house, which there was nothing even around then. And I remember reading the book and going to see there. And I took my wife, who was. I think she enjoyed it, but she didn't, because I was so engrossed in the book. For me, it was so powerful. But I would say those are 2 cool books too, and very well written books.
Okay, so the last one, and I think I know the answer, but why don't you give it to us for anyways? What advice would you give to young people starting in the business today?
Yeah, I would say the thing that I said earlier, which is, assume it's 125%, because if you really want to be successful, it sounds cheesy, and especially from all my years in London, I think everyone gets nauseous when Americans like myself, always make these sports analogies, but you have to do what's expected of you and do that to the best of your ability. You have to think how you're going to help your team, how you're going to help your boss. But you have to really do the stuff that's not expected of you. And that means working pretty hard. And that means teaching yourself often in what would be required at the next level. But this is kind of, I guess, in a bigger company, but even in smaller companies, and I guess just in general, which we didn't talk about, find a good mentor. Even if it's not the absolute perfect situation, if you have somebody who really you look up to and will take the time to teach you and be there for you. That's also, I'm sure other people have given that, but I always found that really helped make big jumps in my career.
Okay, well, that's some great advice. Now, Andrew, I'm just looking at your Twitter and I realize you are woefully underfollowed. So I'm going to do something. I'm going to shout you out here. So everyone follow Andrew. Now, what is this handle? Now, the reason no one's following you is because you got a crazy handle. What is this handle that what is?
It's, I'm just like so lazy. And it was like, I think it was like part of my email from when I was at Deutsche. They took like your first, I don't remember, like, I think it's your first letter, your first name, then 4 letters of your last name, and then 2 letters of your first name, and then like 28 is my lucky number, and that was it, or something.
Okay,
I don't remember.
Anyone that wants to follow,
I should go on Twitter more.
Follows Andrew. It's ASIMON. Oh, sorry, I screwed up. There it is. ASIMOAN 28. Anyways, just look up Andrew Simon at Macro Hive. Andrew, it's been a real pleasure getting to know you, and thank you very much for being on the show. And everyone, don't forget to go check out macrohive.com, and you can sign up for 1 month free.
Awesome. Thank you so much. I had a great time.
Thanks, Andrew. Take care.
So we have the pleasure now to be joined by Nancy Davis, Managing Partner and CIO of Quadratic Capital. Nancy, great to have you back on the show.
Thank you for having me.
Nancy, it's Kevin here. Thank you for coming on. It's terrific to see you. I guess you've raised a few assets since we've last spoken.
Well, not as much actually as tips generally. The inflation protected bond market has had a massive amount of inflows. So I'd say, yes, we're in line with the asset class, but not as, I still don't understand why people own tips by themselves. Let's dissect that. I'm confused.
I think you're being a little humble. Your product has expanded tremendously since the early days when you came on our show and told us about it. For those who don't know, it's IVOL. IVOL. And why don't you just give us a little quick reminder of what it's all about?
Well, Kevin, I'll never forget you because right when the fund listed, I believe you called it your dream ETF. And I remember you had that, what was it, a gorilla or a monkey? What was that thing?
I can't remember. It was one of my famous pictures, though, that I definitely put on. It was
hilarious, whatever it was. I think it was a gorilla. Some kind of ape. But yeah, it's amazing how when we first listed the fund, nobody was talking about inflation or inflation expectations. It was just on no one's radar. And voila, here we are, in a totally different environment. So it's been great to deliver some, really, I think, a differentiated solution to investors. I think, it's been a passion of mine. When I started my career in the late 90s at Goldman, it was right when the US Treasury invented the TIPS market. And, over the course of my career, I've always been like, wow, that makes no sense to measure something as big as inflation with just one index, a consumer price index. It's just like nobody would ever buy, equities and buy the Dow Jones index or the S&P index and say, I got everything in that market. And measuring inflation is so much harder than corporate stocks. So I think it makes sense to diversify away and not just have that one. The big problem I see with CPI by itself is, a third of the index approximately is what they call shelter. It's actually owner occupied rent. It's mostly urban rent. So I think it's, going back to raising assets, I'm surprised everybody who owns TIPS doesn't own IVOL. It's kind of a head scratcher to me because I'm like, why would you just want to have only CPI inflation in there?
Right. Okay. So why don't we tell people about the other parts of IVOL? So you have a certain portion of it is traditional TIPS, but you augment it. And so why don't you tell people what you augment it with and a little bit about your background of why you're able to pick the right spots of the options that you invest in?
Yeah, so we use long options, fully funded options, meaning we buy options. The reason that we do that is inflation, doesn't have a zero, right? Inflation is a very risky thing because it's not like buying a stock or buying, a bond where the asset can only go to zero. We could have deflation. So we like using fully funded options as a way of accessing inflation expectations not measured by CPI, but to do so in a way that it's almost like a debit card where there's never an obligation on the fund above and beyond what we pay for the options. So it gives us a way to kind of hold on, especially, inflation is a really hot topic right now. A lot of people are talking about it. We don't know whether it's transitory or not. And I feel a lot of comfort in running this portfolio with the options component, with the long options. I'm not a vol seller. I don't really like strategies that sell optionality. To me, it's like, you collect a little bit, you could lose a lot. But I love accessing the inflation expectations market with the options inside of IVOL. I think it makes a lot of sense.
One of the things that surprised me recently, Nancy, is the fact that although we've had a lot of volatility at the front end of the curve, meaning in the, at the 1 or 2 or 3 year period, we actually have had very little volatility at the far end. And we look at the move index is up, but it's not like it's up that much. I'm just wondering what your kind of feeling is about fixed income volatility as a whole, and whether you are also surprised that we aren't experiencing higher moves up in implieds.
Yes, I'm definitely with you, Kevin. I think fixed income vol, specifically rate vol, is one of the few financial assets in the world that is not trading at or near its all-time highs. In fact, it's trading significantly below its long-term averages. And the other thing that really confuses me, or I find, perplexing, is that, if you look back, look when we started Q2 this year, the 10-year treasury was around, 175 basis points, right? I'm just looking at a chart from Bloomberg. It was 174 USGG 10-year, 174. Then you look at all of the subsequent CPI prints in the US afterwards, and it's been, 4, 5, 5, 5 with a 5+ handle. And the 10-year yield is actually lower, quite substantially lower. I hear you chuckling. You're like, why is it 30 basis
listen, I'm
points
perplexed
lower?
as well. They're completely looking through and saying that it's transitory. It's actually, I find it ironic because you get on Twitter and you'll see everyone saying that it's not transitory, and then you look at what the bond market's telling you, and the bond market the whole way along has believed that it's been transitory.
Yes, and that I think is an exciting opportunity for IVOL, because the bond market absolutely believes it will be transitory. And so I think I get into arguments all the time about whether people who think it's transitory or people who think it's not transitory. I was like, it doesn't matter. The market is telling you it's transitory. If you think it could be anything other than that, it's a good buying opportunity. I think at the end of the day, there are very few things in the fixed income market, especially with credit spreads so tight, long dated yields so low, even front dated yields, it's like, what are you going to do? Sit in short duration? There are very few places to get a positive risk reward profile, meaning you could potentially make more than you could lose in fixed income. So I'm pretty stoked. I think it's a pretty amazing environment. And let's just say I'm glad we own options, because the rates market, at least in the front end, has experienced a massive shakedown in the last couple, ever since the Fed went from not even thinking about raising rates. Remember those days before the June FOMC, to like, here we are with, more than 5 hikes priced in before the end of 23.
And you've been around in the fixed income market for a while. Do you think that we have more strategies that are playing that front end of the curve, and there's more levered players, and that was why we saw such a quick sell-off when it looked like central banks might be pivoting? Like, did this feel more violent to you than in previous times, or is it just a function of that because we haven't had any real fixed income vol for years and years and years, we've all forgotten what it looks like?
It's hard to say. I think it probably goes back to liquidity. Like, I remember in March 2020, the treasury market almost broke. Literally, ETFs were the only thing that was trading. And so I think it's just a sign that financial markets are very fragile. There's very, very little liquidity in markets. And again, going back to the way that we manage this inflation strategy is using fully funded options. It just gives me a lot of comfort to sleep at night because we know, the tips have unlimited losses, right? They're treasury bonds. But at least with the options portion, I always know what our risk is. And that's, I think, a nice place to be in a market like this where, if you're using linear derivatives or cash instruments that, make a dollar, lose a dollar, the whole risk management process of stop losses is really hard because when the price moves against you, you have to unwind your position, even if you have a lot of conviction in it. So I feel, I think it's liquidity, not fundamentals, but I think it's just a sign that it's a good time for investors, in my opinion, to own fixed income volatility in their portfolio because this stuff is moving. It's moving a lot and it's not priced yet for any kind of fear. Wait
Right.
until we actually have, imagine what would happen if, long dated interest rates were not 30 basis points lower than when they were going into Q2.
Yeah. Well, what if people actually believed it was no longer transitory and it was permanent? And we had a monster shift, of a steepening of the yield curve. And instead of the front end selling off, it was the long end, which is what I think that you and I both think is likely to happen over the longer term.
Yes, definitely over the longer term, I'm with you. But more in the short term, I'm pretty excited about the front dated yields going lower because I feel like with the taper now starting and with, we're heading into midterms in 2022, we have the US election presidential cycle around the corner. We just bought an option that was November 2024. I was like, yes, love this one. It's our biggest option holding right now. It's all public in our portfolio. I'm pretty excited about because I think the cool thing about IVOL is you don't really have to you don't have to make a bet about where you think interest rates are going to go. You just need to think the spread between short and long dated rates will widen. And that can either be the Fed hikes coming out, meaning, credit spreads wider, equities selling off, more of a risk off environment where, especially with the taper and liquidity being withdrawn from the system, or you could have higher long dated yields to help the options. Obviously that hurts the bonds, but I think IVOL was one of the few fixed income funds that actually had positive performance in the first quarter of 21 when, pretty much anything that had duration got hammered.
Right. And just for everyone to make sure they understand, you're trading over the counter options, which are not available to most retail investors.
They're not available to most investors. We have a lot of institutional investors, especially credit investors who, they do companies, they do security selection, they look at cap structures. So we have a lot of other funds as well who buy our IVOL ETF. And the reason that we use the OTC markets and not the treasury curve is, the treasury curve right now is 105 basis points. The swap curve, which is not where the Fed is doing their QE purchases, not where, the Fed owns still a third of the treasury market, that's, 88 basis points. So it's significantly cheaper to use this market rather than the treasury market because any CTA, anybody with a futures account, anyone can access the treasury market, whereas the OTC markets are, I'd say, a more institutional market. It's not as easy to access, and a lot of investors just use us as essentially an outsourced trading desk. And it's pretty cool because we have a bunch of Canadian macro funds. Shout out to Canada. Thank you for your sponsorship, and structured credit funds and credit investors who use our strategy as well. So it's kind of interesting. I didn't really think, when we were creating this fund that we would have so many other professional fund managers. We even have some vol managers who use it, who focus on equity volatility. So it's pretty cool. The nice thing about being an ETF is anyone can use it, whether it's a pension, an endowment, your mom, anyone.
It levels the playing field. So, Nancy, when I saw you on Bloomberg the other day, you were doing a terrific kind of afternoon slot there with all the other ladies. I was laughing because it was it was only female hosts that day, and then they got you in. And you guys started talking, and you started telling us about how you are a big Game of Thrones fan. And I was like, we got to talk some Game of Thrones. So tell us about your fascination to the point where you actually have some characters on your desk. Do you?
Yes, I do. I mean, it just goes to show you anything can happen in live TV. The host, Caroline, she's British. She has a British accent. She asked me before we went to commercial break about my doll, and I was like, "What did she just say? Doll? Like DOLL?" I was like, "Doll, doll," and my brain's clicking. I'm like, "Oh, she means my." I have a toy on my desk behind me, and I think it was definitely not expected, not what I was planning to talk about, but you always have to embrace the moment. So I reached around, grabbed, my little dragon and bobblehead, and showed it off to the world. But yeah, I'm definitely a Game of Thrones fan. It definitely feels like very, very Game of Thronesy right now in the rates market, right? Between you have like. You can do the different houses, right? You have the fiscal spending on one side, you have the policymakers on another side, you have the taper over here. I feel like it is.
And the hyperinflationistas that's the North, the wildlings.
Yes, we're the wildlings.
Are you looking for? There's going to be a prequel, right? Am I correct? I think
there is.
And when is that coming out? Do we know?
I'm not sure when it's coming out, but I am quite excited about whenever it does.
Okay.
Definitely a big fan. And it's so funny because I never used to watch TV. Like I did not watch Game of Thrones when it was actually out. It's all been, pandemic,
this was your COVID binge.
Oh yeah.
I didn't realize that. Oh, you're a relatively new kind of convert.
People were always telling me winter is coming. And I was like, what are you talking about, you crazy people? Like, it's summertime. So yes, I am late to the whole party, but I'm definitely a big fan now.
Okay, well, you can watch the prelude with us all on live 1 week by 1 week. Anyways, Nancy, it's been a real pleasure having you on. Why don't you tell people if they are interested in finding out more about IVOL, where they can look it up or contact you guys?
Well, it's a ETF. It's listed on the New York Stock Exchange. We have a fund website, which is IVOL. It's not I. It's like I for inflation, not eyeball. Sometimes when I'm on television, I feel like I need to pronounce IVOL. IVOL ETF.com is a fund website, and there's lots of information there. There's also a contact us page, and we're happy to chat with institutional investors or otherwise about the strategy. It is pretty different. I feel like it's to me it's similar to if you think about a mortgage being an agency obligation coupled with series of short options. I'm like, this is a positive convexity inflation fund. So it's I think a interesting time. I'm very excited to see how things shake out, but it's definitely the rates market is saying transitory with a capital T.
Well, Nancy, we wish you all the luck, continued success. It's been great being along on your great ride so far, and we hope it continues.
Thank you. Thank you so much for having me back on. I appreciate it.
Thanks. Take care.
All right. Thanks. So we have the great pleasure to be joined by Harris Cooperman, the Kuppy's Corner, and it's so great to have you back on the show, bud.
Hey, thanks for inviting me, guys.
You know what? It's Kev here. Patrick's already messed up your last name. Is Cooperman?
Is he drunk already?
Are you like Leon's long lost son or something?
God, no.
I'm sorry.
All right,
Patrick.
bust my balls. All right.
Sorry.
Okay.
Why don't you try it again, Patrick? It's Kupperman.
Kupperman. There we go. Okay. So let's talk.
Right? Am I right?
No,
get it in there.
It's not wrong. He's not wrong. Okay. So let's talk about Tesla, bud. So I you know what? I was just like stunned when that Hertz announcement came out. That $300 run in Tesla tacked on $250 billion of market cap. Basically, the market cap of Toyota was added to Tesla in just like a few days. Like, what's going on? What's your take on all of this?
I'm lost. I was shorting Tesla 1,000 points ago. I think that's 1,000 points ago and a split. I have no idea. I think actually, Kevin, you diagnosed the problem. You found some lunatic on Twitter who's rolling like, what is it? It's like 1 million YOLO call options. He just keeps rolling them forward each week.
1.5 million he's firing around. He's the second largest individual Tesla holder after Elon.
He's just pyramiding 1 week YOLOs.
It's unbelievable, isn't it? So, Kuppy, you're what, a decade younger than Patrick and myself? Patrick's a little younger than me. Where were you during the late 90s? Were you trading? You were, weren't you?
Yeah, I was trading. Yeah.
So do you think this feels like the late 90s?
No, yes and no. Yes and no. I mean, like the late 90s, there were a lot of tech stocks. I remember some things like Rambus and Qualcomm. They just went insane. But like you could have looked at like Rambus and been like, that's kind of the future, or Qualcomm. It could have been the future of chips. I mean, I don't think Tesla is the future. I don't know what it is. It's just like this crazy Ponzi scheme that some crazy Korean guy is manipulating. I don't know. Gamma is one hell of a drug.
Kuppy, you just don't understand what a genius Elon is. No vision, man.
Actually,
you're like
dude,
you're a boomer. You're as bad as us. You're a boomer that just doesn't understand.
I'm a boomer. He created a bubble in dog-themed fake currencies. Aren't there like 20 or 30 of these things worth more than 10 billion now because they're dog themed? Like you could make a whole ETF of dog themed fake currencies now. Like this is brilliance on a scale of stock promotion that I don't think the world has ever seen before.
Yes, so I completely agree with you there. What about Patrick's second part of his question there when he asked you about Avis and what do you see there?
Well, so Avis is actually a real company. I mean, I've actually used the product and it works.
Send all your Teslonians, send all your hate mail to Harris directly. We have nothing to do with these views.
Look, it's profitable. It's a rental car company. About once a decade, they have like 2 good quarters, and then they kind of go back to kind of shitty returns because it's a commodity business. And they've had a really good run because, suddenly with Project Zimbabwe, used cars are an appreciating asset. And, normally they're depreciating. So it's kind of rewritten the rules of accounting. And Avis just reported a really surprising quarter. And look, there's a lot of short interest. Avis not only had a blowout quarter and guided higher, but they bought back 10, 11 million shares or something. And you ended up with kind of an infinity squeeze. I don't know how many times it halted this week, but I mean, there was a moment in time where it just kind of like would gap up 50, halt, indicate gap up 50. It was kind of nutty. I don't get it, but it's crazy. When the things like this happen and implied vol goes to like 1,000. I was selling the 200 puts, so before the earnings release, you basically get it back at the same price, and they were paying me like $15 or $20 or something with like 2 weeks left in them. I mean, it was free money. So there's always stuff you can do, but no, I'd never stand in there, take the other side of an infinity squeeze. That's just lunacy. And then you're asking about Hertz. Whereas Avis had good earnings, I'm not really sure if Hertz really knows if they have a deal with Elon or not. They put out a press release saying they did. Elon corrected them and said that they didn't. Hertz said, no, we've already received the cars. Elon said, we haven't sold you any cars. And then Hertz changed their website because they had been marketing these cars that they might not have. I don't know how 2 public companies could be this off. Do you have any color on this?
Well, okay, so if you read the book Ludicrous, it's a Tesla book. Now it's by a Tesla skeptic, so you have to take it with a grain of salt. But I used it as my summer reading this year on my trip, and I was shocked that I didn't realize this, but Elon actually had sold the company to Google, to Sergey or Larry, can't remember which one of them. And then when he saw what the price of the stock did, he reneged. So if I listen, I don't have any information about this, but my guess is that he made the deal. He said, you're done. They didn't paper it. They'll say, well, we'll paper it later. And then what happened was he saw the stock explode and he's like, whoa, there's something here. And then realized he could probably do better from Hertz. And they're learning what transacting with Elon is like. That's my reading. And listen, I am an Elon skeptic. I don't think much of the guy. It's from a personal the way he conducts his business and his affairs. Obviously, he's the world's richest person, so I'm wrong and the market's right. But that's where I see. I know this is your Kuppy's corner, but I was wondering if I could give a little bit of color on the Avis Hertz, because a smart, shrewd hedgie told me that what was happening was a lot of the Hertz guys owned the equity from the debt. Remember, they went through the restructuring,
Right.
and they were using Avis as a proxy to short. Because
So they were basically, so they're the long Hertz, short Avis, and the whole spread blew out. Wow.
Right. Wow. And that makes sense when you think about it. And so that's kind of my little inside baseball, let's say.
Oh, there you go.
Someone's pod's got to be hurting.
Anyway, Kuppy, I wanted to just talk to you a little bit about St. Joe's. This
absolutely.
thing, after having an amazing run. Yeah, like first of all, you featured it all the way down when it was in its 20s, when we talked about it on the show the first time, and then it had that amazing run at the last quarter of 2020, first quarter of 2021. But it's been stuck in purgatory for the last 6 months, just treading water. But it seems to be coming back to life, and maybe that trade range is breaking out. Is there a catalyst behind this, or what's your thinking?
I knew you'd cue in on this. It starts getting above 50, and you take out the magic markers, and it gets bullish again, doesn't it? Sorry, Patrick.
No, it's all right. Listen, I had to use a pretty. I had to use the really thick crayon. Like I had to really draw that line thick to.
Yeah, look, it's been in 6-9 months. It's between 40 and 50. It's been consolidating. It's not the most liquid thing in the world. And the numbers have just been explosive on the revenue growth side, and they're starting to turn revenue growth into cash flow because when you have a property business, it takes it takes some time because you're developing something, and there's a cycle, and it kind of this gestation, and it's starting to turn into cash flow. And the Q3 numbers showed I think what the potential of the cash flow is here. And I think it's surprised some people. Actually, I thought they sort of missed a bit, but maybe I was too optimistic. In any case, I think it's one of the cheapest stocks on my screen. We're the lowest risk stocks. The Florida Panhandle is absolutely booming. I think it trades at like quarter of NAV. I think NAV's high 100s, and I think they're adding to that NAV at a pretty good clip. And they're producing quite a lot of cash flow right now. I think if you play this forward a few years, this is trading at a mid-single digit cash flow multiple. I wish they would buy back some more stock, but it is what it is. No, I think it's going to go a lot higher. It would be my largest position if uranium didn't keep going up, but it's my second largest position. I actually doubled the size of this one in the mid 40s. You can almost see on the charts where I stood in there at 42 and 43 and was like 20% of the volume VWAP every damn day.
See, there you go, Patrick. You're always looking for the explaining support and resistance lines.
Yeah, it's the Kuppy support.
Yeah,
it's Kuppy. You know what, Patrick? You know what I should have done? I should have one day just blasted it to 39 and blew everyone's stop and just bought it all. But I don't want to sell 50,000 shares. I'm not getting back.
That's right. Do you know there's a famous story of Mulherin who used to trade with Boesky, and when there's like a risk arb deal and there's some announcement that everyone's on pins and needles for, and the stock is real thin, nobody wants to trade. One day, right before an announcement, the stock started going crazy, and Boesky phoned up Mulherin and said, like, "What the hell's going on? Somebody knows something. No, somebody knows something." And Mulherin just said, "No, I'm just fucking with everyone. It's so much fun." Now, he did go to jail for securities manipulation, so I don't know if it's the right thing to do, but it sure was a good story. One of the things, Kuppy, we were talking about the shit coins, and I must say you had just the terrific line that you said you talked to guys, and they've made all sorts of money on some shit coin, and then I say to them, well, what are they doing? They're selling it and putting it into the Kupperman fund. He says, no, they're selling it and buying some even shittier coins, which was pretty funny in itself. But then you said, but they are buying real estate. And I was actually wondering, when you said that, it triggered something in me. And I thought to myself, one of the difficulties in when you've seen this bubble kind of inflate. You say, well, what else are they going to buy? Yes, they're inflating this bubble. There's no doubt about it. But there's got to be something else that's going to go up alongside it. And to me, it seems to make sense that real estate might be a beneficiary. What do you think about that kind of theory?
I think real estate is going to keep going up. I mean, in the end, there is no, what is it, Tina? There is no, I fucked it up. There is no alternative, yes. And, you can't go into the stock market. It's gone straight up. And I think people want to
and they're not ones, and not only that, these guys aren't, or guys and gals, I shouldn't say just guys, they're not ones to just embrace stocks at this point. A lot of the reason that they're in stocks in crypto is because they don't believe in stocks. It's for us boomers, right? And the reality is they do want to put it into the real world. They're not all going to buy NFTs. There will be something. And the more I think about it, the more I'm kind of coming around to the idea that real estate is one of the ways to play this expanding bubble in non-traditional assets.
Oh, absolutely. I mean, look, if you go buy some shares of something, great, you enjoy it on your balance sheet. If you go buy some real estate, you got to put 20% down. They finance it at nothing. Real estate's appreciating 20% a year. You finance it at 3%. You have that huge positive carry, and you get to go enjoy a house by the beach. And that's what people are doing. They're buying second and third homes, and that's part of why Joe's been able to raise prices nonstop for 3 years in a row. People have wealth, and they want to get another home by the water. And, I'm seeing this in Puerto Rico too. Guys are just saying, I got one in San Juan. Let's go get one, over here. Let's go get one over here. Because, they're all making so much money. They don't know what to do with it.
Yeah, it's absolutely shocking. Okay, so let's talk a little bit about KEDM. A lot of these trades that you're highlighting here, you highlight on the good old KEDM. And not only that, Kuppy, I must say, I've had a couple of people tell me, serious type investors say, what a great resource your Discord server has become. I just want to pass that along with part of the benefits of membership, or subscription to your service is that you get the Discord service or membership, and a lot of smart people on there talking about a lot of different things. So why don't you tell people about it and how they could go find out more and talk a little bit about this Discord that you have.
Yeah, absolutely. KEDM stands for Kuppy's Event-Driven Monitor. We're tracking over 20 event-driven strategies. It's mostly corporate events, but some of them are fund flow events. I've increasingly been writing some commentary. The first couple pages, we look at usually a macro theme each week. I'm just having fun with it. I created it because I wanted this data myself, and I'm amazed people are willing to pay for it. But it's great because my team is making some salary. I don't have to pay them anymore. But we set up a Discord server just because I thought it'd be fun to have a chance to chat with people. Twitter is kind of a zoo, and everyone's at least an adult in the Discord server. And a lot of the people who've signed up for KEDM, they run funds themselves, and they want to discuss in a serious way the fundamentals of these companies. And, I'll check in on, we've got about 20 different rooms set up for the different strategies and, or some of the thematic stuff like uranium or inflation. And, I'll check in on this stuff, and it's just amazing the depth of knowledge some of these people have because, their fund is fixated on one topic, or, they just met with management, or they've actually read the 10K where I haven't. And, they'll flag the 3 things, and, they'll be talking about some footnote, and I'm like, oh yeah, that sounds important. Like, I wish I had an analyst to, deal with this stuff. So I think it's just great. I can't cover the world. I don't think any hedge fund can. And, I got a couple people working for me. We can't cover it all. And so, I just think it's great to have this resource of other people who are, full-time engaged in this. There's a few hundred people in the Discord at all time. And, the most recent thing we rolled out is starting to do these happy hours, Friday once a month. We're going to get a distinguished guest. Kevin was our first. And, everyone, I think the model with podcasts is that, it's usually 2 or 3 guys chatting. And I wanted to open up to the peanut gallery and let everyone else get a chance to ask questions, And so I'm going to bring some of my friends on the show and let people ask questions. And I just think it's another great way to, break down barriers and get people access to information. Our guest today, I guess it is, Friday, is going to be Mike Alkin. We're going to chat some uranium because I think it's just the coolest thing. And I think it's the best trend on my screen right now.
Kuppy, it was a real honor being on your show, but I think you just started the low so that it could only go uphill from there.
You did great.
Okay, so why don't you
we didn't even have a format.
Why don't you tell people where they can find all this good stuff?
go to kedm.com. We have a 4-week free trial. Sign up for it. You'll get to see what it is. And, I'm pretty confident you'll make some money out of the, idea flow. And so, if you make some money, sign up for a full year.
Terrific. Well, thank you very much, Kuppy, for being on, and have a great month.
Awesome. Talk to you guys soon.
All right, Patrick, time for talking charts. What do you got?
Well, let's get to our top threes. Let's first of all, let's jump to last week's top three. We talked about whether it was a breakout in the dollar. We were talking jobs numbers and the FOMC. So very quickly on the dollar, the dollar, I don't know whether we want to call that a breakout yet, but it certainly continues to be strong and edging toward a multi-month high. That euro's hovering around that 115. Still can go. It just wasn't the week that it was really making the big move. How did you take in the jobs number? Obviously strong.
It was strong, and more importantly, Patrick, was that last month's were revised higher, so it ended up being that all the worries about last month, or at least not all the worries, but a lot of the worries from last month were alleviated. But what's interesting is the fact that the bonds, they no cared. It's a big, huge rally in there, so I guess they were expecting something else.
I definitely want to talk about those yields in just a moment. Like it's crazy seeing how the bonds reacted, and then of course the FOMC, right? It's
it was exactly down he played it right down the middle, down the fairway. Did a great job. He's actually getting much better at it. Probably just in time for him to be gone, and. He's finally figured it out, so they're going to get someone new to mess it all up. I know, but he's figured out that what to say, and even more importantly, is that he did not let the bond market push him around. It might just be a function of that we were later in the cycle, and then we'd already had the BOE, Bank of England, do their stuff. But anyways, I'll save all that for when we're talking about rates.
All right. So let's talk about the top three things to watch next week. And, number three, I wanted to start off by touching on the small caps. And while certainly the NASDAQ and the S&P 500 have been ripping, the small caps, I'm just going to use the IWM here on that amazing Koifin website. What we had was basically the entire 2021 year has been one big sideways trade range. And the small caps, which had an extraordinarily strong run in the first quarter of the year and the fourth quarter of last year, really just were stuck in purgatory. And this week was a big breakout out of that 1 year range. And it'll be really interesting to see whether this is now that finally these small caps start to participate in all of this.
Patrick, one of the things that I thought was interesting was one of my favorite guests that we've had this year is being Horse Lever Fat. I can't remember it. Yeah. Great trader, a lot of fun. One of the funniest guys that we've had. And one of his things is that he's always been selling the Russell for this past, I don't know, as long as I've known him, for 6 months. He's always, said something to the effect of, if it's up, you should sell it, you should sell it, you should sell it. And when it broke out, he changed. He changed his tactics. He started buying it. He flipped. And I think that that's a function of how there was a sea change in the attitude towards small caps. A lot of traders that had previously said, no, it's stuck, it's not going anywhere, because as you have correctly pointed out, it was a consolidation and there was no reason to get excited about small caps for the past 6 months. How long has it been?
Yeah.
It's been a long time. And there's
since the start of the year. January was an up, but it's been basically 9-10 months of sideways price action.
And Patrick, you're much more of a technician. You practice the dark arts, but I'm pretty sure.
I don't think you have to be a technician. Even Paul Tudor Jones would identify a break to new highs like that as being meaningful.
But what I'm saying is the fact that the longer something bases and does nothing, the more of a move it will be on the upside.
I don't know whether I'm going to subscribe to that alone, but the one thing we do know is that back in the first quarter of the year, it was incredibly overbought. and now it's unwound. It's in overbought state. It's consolidated, create a solid base, and that base can be an anchor for a new big move. And this is why we're watching it. We're going to see whether the bulls can just keep building on this and really put some tailwind behind these small caps. And more importantly, will they, on a relative basis, be equal or outperforming the market, or are they just finally starting to participate in some way?
Watch this be the mother of all prairie dogs.
It could be, but you know what's interesting? But you take a look, like airlines are breaking out, all sorts of different things. A lot of the reopening trade stuff's working. Like that's a lot of the small cap spaces in those types of space. Like it's a middle America is kind of opening up again here. And
one of the things about small caps that scares the shit out of me, though, Patrick, is the fact that you get these infinity squeezes, as Kuppy talks about them.
Yeah.
And this week it was in Avis car, and those end up being big portions of the index, and they end up helping it out. So if you think there's more infinity squeezes coming, and you think that they're going to come in the smaller stocks and they're not going to come in the big names, then maybe we're going to see more of those pushing along.
Yeah. So let's go to number two. Number two, watching gold and silver.
You just had to do it, didn't you?
Yeah, I did do it. And you know what? Nobody has shown any love to gold and silver. They've just been dogs. It's been an extended consolidation all year long. See, Russell's been consolidating sideways. Gold's been consolidating downwards. and
Isn't that called a decline?
Yes, we call that a decline, but it's a consolidation, right? And so
that's a new Patrick euphemism. It's consolidating downward.
And so the thing is that gold and silver had both a little dip last week and recovered quickly, starting to show characteristics that maybe it's being bought on dip. Maybe. I don't want to rush to any too big of a conclusion, but this is how breakouts sometimes begin. And I'm watching. It'll be really interesting to see whether gold and silver, some of those gold miners, like everyone, so many stocks in so many places have already blasted off and taken off to the races, and especially in the commodity space. But all those gold miners and everything are just trading right along those lows. There's lots of upside if the breakout is for real, and that's why I'm watching it next week.
I just wonder if it'll be able to do it before year end. Will there be just too many people with losses that want to get it off the sheets? And do we need this to bottom closer to, the new year?
Yeah, it's possible. I know you wrote about that. It's a tax loss thing. It's possible, but I'll tell you, if gold and silver, the longer gold stays above 1,800, and especially if it can beat 1,850, then you're going to have to drop that narrative. Anyway,
well, I'm buying. To be fair, I don't know if I can pick it, and I don't know if that's going to be the only factor that stops it from going.
Yeah,
I don't think that that's what's actually causing the pain in gold. The reality is nobody cares, and so at the margin you're getting incremental selling, but that can change in a heartbeat. I've decided that I am going to average in over the next month or two.
There you go. And so number one, the inflation numbers. And I know we had Nancy on and we talked about some of the different views, but obviously here we're gonna get another print. We're gonna see what's up this month on that CPI and PPI, and it's gonna be really interesting. But what continues to be, and we'll talk about the charts in a moment, it doesn't seem like the long end of the curve cares.
No. And that was what I was going to say. Sure, we can all watch the inflation numbers and we can say that they're important to watch, but what does the market do? If I had given you the unemployment numbers today, would you have been able to tell me what bonds were done? I wouldn't have been able to tell you that.
No, it's crazy. So let's actually take a tour around the markets, and since we're on the topic, let's hit up these yields. So if we go to the 2-year yield, I mean, we in our proper fashion, I think we on the market huddle marked the top. The moment we decided that it was important enough to bring up on the show, it's reversed. We Goochered it. We Goochered it.
Well, that's something you can count on. As sure as that you're, death taxes, the sun's going to rise in the east, and that
if me and you are talking about on the show, yeah, we're gonna, and that's why you go on the merch store and buy the Gucci T-shirt, right? Like it's. Anyway, but what's interesting, so that was the 2-year yield, which the 2s and 5s were where there's been a big run. But what is interesting is look at that 30-year yield. It is, the 30-year yield is right back down to where it was in the summer.
The flattening has been unbelievable.
Yeah.
And it's been shocking. But really, Patrick, all the action was at the front end. That's where all the extra levered players were. That's where all the pain was. And yes, the long end's done some funky things that you might not expect. But having said that, the volatility at the front end, it just dwarfs the volatility at the far end.
So to Nancy Davis's point, which is that the market is the bond market is trading completely different than the inflation narrative, right? The bond market's not drinking the Kool-Aid,
or the bond market knows or understands or thinks it knows that inflation will be transitory and that we will see lower rates in the future. Or is it point of view? He argues to some extent. Everyone thinks that the market's all this wise, all-knowing beast, but the reality is that people have money to put to work. And do you really think?
No, I don't buy that.
So let's look at the German 10-year Bund. Do you really think that it's giving you a signal, or is it just forced investment?
No, actually, I wouldn't even go with that story at all. I just think that, I know it's almost, you could probably be sick of saying it, but the whole point of financial repression is for bond yields, and especially government bond yields, to never be in line with inflation. And the whole point is deep negative real yields. And so expressing your inflation expectation trade based upon government bonds is going to be a failed trade over and over again.
Having said that, that is why you need to own the tips on the other side. And that's one thing that people, although I'm a big bond bear, I am also a big tip bull. And tips have been this year the best performing asset class until Jack Dorsey Gucci'd it by telling everyone it was hyperinflation was coming and top ticked the 30-year break even to the day. To the day. You can go pull up your 30-year break even chart. Go look at Jack Dorsey's tweet, October 22nd. He top ticked it to the day.
Top ticked it.
It's Jack Dorsey on the cover of Zero Hedge. Yeah, Patrick, I sold some break evens. I sold almost all of them. And you know me, those are I feel naked. I don't own any, and I feel
something's wrong in the universe when Kevin Muir doesn't have his break evens.
Well, and that was just when I saw people telling me hyperinflation and talking about it, I thought to myself, this is it. This is all in the price. Now I'm hoping that we very quickly get a pullback and I can get them back on because they don't feel right. I just don't feel right.
All right, let's talk some stocks, buddy. Okay. I want to. Well, we got to touch Tesla because we talked about it with Kuppy, right? But it's
Kuppy.
What
you mean?
Cooperman.
Kuppy. I'm going to call him Kuppy from now on.
Kuppy. Oh my God!
Well, it's Cooperman. Just Kuppy.
Kuppy. All right, so.
This thing, I can't. I don't even want to talk about it anymore. The only thing I will say is that although we weren't
on the
we weren't smart enough to be long. We weren't smart enough to be long, and some of us even had some shorts. One of us is stupid as anything. We identified the strength there.
Yeah,
and it looks like a huge cup and handle formation. As I say, I don't know anything about technical analysis, but isn't that a cup and handle?
Well, it is a basing formation that made higher.
No, but
you could call it something it's all in the eye of the beholder. But the bottom line is it did have that characteristic, yes. And so, but what is interesting, Kev? I put on a trade that has a bearish tilt. It's an options combination that is not outright bearish, but it is slowly. I'm fishing, buddy. I'm fishing to see.
Wow.
Like I honestly think that this kind of a gamma squeeze, like just is a perfect example of what like happened with Avis, right? Which is Tesla could be a $1,500 stock. By no means should you be short the underlying. That's it's suicide in this kind of a run. But mean reversion of these things is like money in the bank once the gamma runs out, right? Like once at some point the dealers are going to jam the vol up high enough where rolling weeklies is just such an expensive, costly thing that it's that at some point it's going to exhaust it and it's going to mean revert. Don't you think?
I don't know anymore, Patrick. The fact that I'm not telling you that yes, we're almost there, and this is probably
you've given up. You've given up.
I haven't given up. No, are you kidding? I haven't given up, but I've given up. I've given up talking about it.
Interesting. ARC can't seem to catch any.
It's terrible.
Yeah,
it's awful chart. Everything else is screaming higher. This thing
largest holding is Tesla. Tesla goes in this monster rip, and this is what ARC can do. You could this would be the ugliest chart in the entire stock market if it wasn't for Tesla keeping this afloat.
I completely agree, Patrick. It's shocking to me how bad. But don't forget, she owns Zillow. She's puking out Zillow after that terrible thing. She
bought more into it, right?
No, I think she's selling to Zillow, but I think she's buying more Peloton. I'm not sure. Who knows
my
what she's
God.
doing.
Okay, let's talk about those two stocks.
Yeah, because those are two like ARC specials, right?
Yeah. So like Zillow just eats it from 100 down to like $66.
Shocker that the AI isn't as smart as everyone thinks. By the way, cars can't drive themselves either. But anyways, basically what happened there was that they thought they could go and use AI to buy individual houses. The reality is the only ones they bought were the ones that the AI mispriced.
Yeah.
Right? Yeah, because it's self-selection. They don't win any of the good ones. They just win the bad ones. And then Peloton just shit the bed. Like that is, dude. I'm gonna. You know what? That is the formation of shit the bed.
Listen, there are technology companies out there that you can drink the like Uber Kool-Aid, and there's like a future for these kind of things. But this idea that exercise bikes were because you put some sort of a neat little
an iPad on a bike.
That somehow they are going to conquer the universe and deserve these kind of multiples was the biggest joke. Yeah, and I was a seller all along.
If you put it in a car, though, it's a completely different thing.
Yes, because if it was in a car, that would be different. But at least if Peloton made their stationary bike electric, as opposed to
that was the problem.
As opposed to manpower.
They wanted us to get out there
actually
and
pedal.
Yeah.
Like I mean, they had the wrong idea for long-term sustainability, right?
Yeah.
Okay, I'm going to shut up before I.
Actually, but anyway, Patrick, while we're talking stocks. Big shout out to our buddy David Wu that was on the show last week. He said, and I think I've got it right, and the reasons might not have come exactly true why it's occurred, but he said you should buy Pfizer and you should short Moderna.
Really?
Yeah. There you go, folks. You just found out that Patrick doesn't listen to the guests.
But listen, it's. I would have taken it against Merck even. But
and you know what the pisser is? I thought it was a great idea. I said to myself, I really like that. And listen, everyone that has that trade on, you should thank me because the fact that I didn't do it was why it worked. But I must say, in terms of market huddle timing, that's got to go down as one of the greatest all-time timing trades ever in terms of it occurring. Now,
listen, I mean, Kuppy calling St. Joe's at the start.
You're right. Kuppy's had some good ones as well. So it's in. Let's put it this way: it's in Kuppy's league. This is one's in Kuppy's league, and it was a great trade. And someone said, "Oh, it didn't happen exactly for the same reasons." And I said, "Some people were lucky enough to be born smart. Others were smart enough to be born lucky. I'm going to take the latter." Anyways.
There you go.
Moderna
Anyway,
just looks like shit, though. Like, look at this chart.
yeah.
It's just so bad. Pull it up, mRNA.
Oh,
It's almost scary, and this
you know what's the shitty part is that like I'm a fan of the biotechnics, and the mRNA. Moderna is like a big chunk of the IBB. And, and it's like playing Pfizer. You got to go into the XLV to get the real big kind of.
So this is actually going to hurt the IBB because it's overweight.
Yeah, because it's overweight.
Well, can you pull up that
Moderna
chart? Because actually, from a seasonality point of view, I highlighted
like look.
that.
Yeah, like
it was supposed to be it's supposed to be the point where IBB does well, and did this mRNA make it? Ooh,
yeah, it's look at the way it ate it. But see, this is the fun part. Like Kev, I know you know what you just need to go to the XBI. The XBI is a much more diversified biotech ETF, and look at the way it's basing and turning up. I actually think that if you're going to play your biotech, I would go because like the largest holding in the XBI is like 1%, while the IBB's got all the big mega biotechs weighted like super big. And so like if you want that really diversified play on biotech, this XBI is a better way to play it.
There we go.
Right?
See,
like I think
you're good for more than just your dark art specialty.
But I wanted to just touch on one last thing, and we're going to wrap, to at least for this part of the show. I wanted to just highlight the way that some of these, reopening trades are playing. I'm going to just look at the JETS index, which is the airlines,
Ooh.
and the airlines are coming back to life.
Giddy up. Well, that was the Pfizer
I think
news.
That was the Pfizer news, and like hotels, the cruise lines, you basically have the entire reopening trade potentially coming back to life. It should have probably been the way I worded the top three. Like, I think that this is something worth watching for sure. Anyway, that's all I got, bud.
That's awesome, Patrick.
All right.
All right. Time for skin in the game. And I lost again, didn't I?
Yes, you did.
I think, you might be ahead now.
It's entirely possible, but I specifically said no boxed wine when you're delivering on this, buddy.
Oh yeah, I lost a real wine.
You better not chimp out on some $20 bottle, buddy. Like
no, I got to do a real bottle.
You got to do a real
and listen,
bottle.
the boxed wine was funny the first time, so I got to. If I'm going to do something funny, I got to come up with a new.
But no more funny.
Slang.
Deliver real wine. I want I want to enjoy a nice moose steak dinner with a nice red wine.
Yeah,
and no whites. Don't deliver
I don't
me
know
white.
because you've eaten all the tenderloin on me, and just going to serve me some other crappy.
Yeah, I'm going to give
cut.
you the sirloin cut for sure. Sorry, buddy.
Soybean. Yeah, that's what I bet.
Yeah, it was the beans, and we bet on the 1250 level up or down. And you know what? I sort of like wheat and was really strong. Corn was playing on, and then the beans were just lagging. And I was like, you know what? If beans can't rally in an environment when the other grains are going this way, nothing's going to take them up. I was ready for this bet, buddy. I liked it.
You took advantage of the fact that I think they're all three of the same.
Yeah, and you know what? There you go.
Well done. Well done. You got me.
So why don't you talk quickly about the rules?
Okay,
or
the
just give a summary quickly
of the game. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart, degens. Every week, one of us presents a wager. The other guy chooses which side of the bet he wants. Every wager needs to settle in full, and the currency is as follows. We won't bother with that. The winner is obligated to create a bet for the following week. Okay, Patrick. So what do you got for me?
I'm going to go, and we're betting on the asset that shall not be named.
Oh, come on.
I'm betting on the asset that shall not be named.
Shit. Okay, what are we doing?
It's so just for our listeners that don't know what the asset that shall not be named, it starts with B and it ends with coin. Anyway, so the current level is 61,209.
Yeah.
And it's been just after a really good bull run, it's been consolidating sideways. And I love my over-unders. It worked really well for me here on the beans, and I'm going to make you pick. Do you take over-under for next Friday's close from
Okay,
where
so we have
closed
to
this
be a
Friday.
little clear about this because Bitcoin is a modern instrument, and you can access
4
your wealth
p.m.
at any
Eastern.
time, right? That's the key. They tell me
Yes.
that on Twitter all the time, that on the weekend, some very famous Bitcoin enthusiasts will tell me, oh, you can't access your stock wealth on the weekend, and they can access their Bitcoin wealth on the weekend.
Just stop digging yourself into a thing. We're just betting cleanly on the price here. Forget about your little
my little rant. Okay,
because honestly, you're just gonna get a hate mail.
They've given up on me. They've given up on me.
No. You are trying very hard to get a new one. So let's just make a clean bet.
Okay,
up or down. With no bias on our long-term views of what we think of this.
Patrick,
this is simply
I'm
price.
picking down. 61,111 is the price right now. I'm picking down all the way, and I'm going to double up on our wine bet if you're prepared.
Done.
Okay,
another
folks,
bottle of wine.
I am digging a hole. I am digging a big, huge hole.
And it's not double or nothing because there's no netting out of trades.
Positions.
This is important to emphasize to our listeners that everything is physical delivery on every single bet.
So that means that we'll be having my wine and your wine while we're having the moose steaks.
That's exactly right.
Hopefully.
All right.
Or I'm bringing 2 bottles.
Okay. Exactly.
Which is
all
probably
right.
what's going to happen.
All right, let's move on. It's time for No Stupid Questions. Lena, hop on. Take us through this because no stupid questions, just only stupid answers, and we're about to start.
Okay, so first question. Hey guys, I wanted to ask a question about moving averages. It seems like the 20, 50, and 200s are the most commonly used. If I used a 19, 49, and 199, will I be one step ahead of everyone else?
So dark arts here. Do you want me to do this or you want me to do this?
No, because I want to talk about something that I realized that's very important. This question reminds me about that scene in There's Something About Mary. Do you remember?
I just spit out my beer
when they're driving.
This would have been a perfect gift if I got caught on camera.
So they're driving along, and the fellow says, I've got a real plan. I've got what I know what I'm going to do with my life. And Ben Stiller says, yeah, what are you going to do? And he says, well, you know that video, the 7-minute abs? I'm going to make one called the 6-minute abs. So that's what this is. Instead of the 20-minute moving average, we got the 19-minute moving average.
So I'd like to actually give a real answer as opposed to.
Come on, I like my answer.
I'm
sticking with my answer. You go with your answer. I'm sticking with mine. My answer is go watch Something About Mary.
All right. So what we do know is that 20, 50, and 200-day are most commonly used moving averages, but that doesn't actually mean that that's where everyone makes their decision or how they make their decisions. 19, 49, and 199-day moving averages are pretty much trading at the exact same level, and prices tend to break those levels almost at the exact same time. You're probably not getting an edge, but moving averages themselves don't even give you your big advantage if you, let's say that I'm going to buy when it's above and sell when it's below. It's really a strategy that if it really worked perfectly, then everyone would be a millionaire, by the end of the year. What makes a trader really good at using moving averages is having a disciplined methodologies of how you manage your risk, where you end up taking your profits, how you manage your through. Having an edge simply by adjusting the moving average is barely going to move the needle on your results. It's about the way you execute as a trader that is far more important than adjusting or tweaking the actual moving average. That's
so says you, but I'm going to go. This fellow's doing 19. I'm doing 18-minute.
So you're going to do the 18, and you're going to have an edge on him.
Yeah. Next question.
All right.
Howdy, Huddle. Your show and Patrick's other show that shall not be named are my favorites for learning about the markets. My question is simple. Do you trade interest rate futures? Why or why not?
Kev, take it away.
I trade tons of interest rate futures all the time.
And there were a lot more of them trading a few weeks ago until they all got zeroed on that move, right?
What do you mean in terms of
the front of the
traders?
curve on the 2 years, the 2-year rates?
And the reason that I think a lot of people don't trade them is because they're intimidated by them, but they shouldn't be. There's a lot of times when I write my pieces, I'll explain it, and people are like, "Oh, that's actually not as complicated as I thought." And it's just because people have exposure to stocks, and so they think about everything in stock terms. And then when they look at interest rates, they think, "Oh, it's actually not. It's not as mysterious as it might seem." One of the reasons I like it is because it's kind of more math based, and I've always been somebody that enjoyed that aspect of it. So in my
But
career,
it's even simpler. It's even simpler to trade the euro dollar ones. We should have our good buddy come back on and talk the euro dollar futures market again.
Alex Manzera, one of the greatest traders out there. If you guys are interested in the all the excitement that's happening out there, go Google him and pull up his blog.
We should get him back just to.
We
have
should
a
actually.
chat.
Well, I almost someone's actually suggested it, and I was going to get it, and then I realized I'd already booked 3 people this week, and I thought Lena would kill me, so I was a little scared.
You should have been.
That's right. Long and short, yes, I trade interest rate futures. I love them. They're one of I probably trade just as much interest rate futures as I do stock index futures. It's something I really enjoy. And I would suggest if you have at any inclination at all, go get into it and start to have a look at it. And there's lots of half contracts. There's lots of different ways to tiptoe in. But again, remember, they are futures and they will trade with leverage. There is leverage involved, so be careful from that perspective.
All right. On to the last question here.
Yeah.
Hi, Kev and Patrick. Hi. Been watching Tesla, haven't we all? Week after week, it is gamma squeezed up. People buy weekly calls, and the market makers hedge by buying the stock. Expiration comes and goes, and the stock keeps going up, even in aftermarket Friday evening. Where is the unwind? Are the market makers ever selling the stuff? And why is that invisible on the tape?
First of all, he says people, but it's only that one guy in Singapore, right?
That guy
we talked about it. We talked about it with Kuppy, but why don't you go for it and re-explain it, because that's a great story.
Well, just quickly, there's a fellow that was on Twitter, and I remember bringing it to Kuppy's attention a couple of weeks back, and I said, "Oh, look at this guy who's claiming that he's the second biggest holder of Tesla, individual holder of Tesla, and he's talks about how many calls he has and his strategy for options." And I thought, "Oh, he's full of shit." I thought to myself. And then Bloomberg found him, and Bloomberg went and confirmed his statements. So all of his claims, they saw the account statement. And I guess there's always a chance that he pulled the wool over Bloomberg's eyes, but in this day and age, let's put it this way. His behavior that he's describing explains very much what's occurring in the marketplace. So I tend to believe it. In terms of why this doesn't cause selling towards the end of the week, I'm a little perplexed about that as well.
Isn't it just because it's being rolled forward?
That's all I can think about is that they're just, on the whole, what is occurring is that they are, as they win at a bet, they're increasing the size of the next bet.
Which means the gamma stays relatively unchanged because they've doubled the size of the amount of calls.
Well, yeah, they could just be, if you think about the strategy, if it works, it's kind of like going to the casino, and let's say you're on the roulette wheel, and let's say you're playing.
That's a wrong example, because in the casino, the size of the bet doesn't
well, no, the roulette wheel might pay like 10-1 or whatever. I don't know.
But the thing is but the size of the bet doesn't change the probability of the outcome.
That is true. You're saying that
gamma,
they're muscling it and causing it to be
more
likely
they're
to
actually
win.
Forcing market makers to do more buying. They're actually manipulating the market.
But Patrick, when they, at the end of the week, they either have to exercise those options or they have to sell them back to the market maker.
So how did the dealers end up crushing GameStop? They just jumped the vol. Like, I'm shocked that we have not seen a substantially larger jump in implieds on Tesla. I mean,
Patrick, it's one of the top 7 biggest stocks in the index.
I know, but it's still like with this kind of size coming in the options market, you would think that they would have to quell it by like jumping up the cost of the options.
But
no?
so can I just go back to the question though? Just
Oh yeah, sorry.
quickly.
Go ahead.
If you let's imagine you're this crazy guy and you bought 100,000 of some weekly calls at the beginning of the week, and then you go to sell them. You have to sell them or exercise them, one of the two. But you can sell them and roll them to the next weekly calls. So now all of a sudden, let's say you had $10 million in premium, but that $10 million turned into $20 million because the options went up in value. Now instead of buying $10 million the next week, he's buying $20 million, and this goes on and on and on. He just keeps rolling like just a complete lunatic. And that is why I believe that we're not seeing the end of the week selling, because they're taking the profits and completely throwing them right back in with even more leverage.
Yeah.
So that's my theory. But it's just a complete theory. But when I look at this fellow, it's crazy. And go read about him. It's fascinating. He almost went bankrupt in 2020 because he was using so much leverage.
It just kept pressing. Unbelievable.
It's crazy.
Anyway,
I actually, before we
and for certain, it's for certain though that if he keeps pressing it this way, that's going to be the outcome on the other side is again. Like unless he when the musical chairs stop, you think he's going to have a chair?
Well, yeah. The other thing that people need to realize is that they're making all these dealers short gamma. So they're squeezing them in terms of they have to chase it on the upside. These dealers will be short gamma on the downside as well. And that is something people should remember.
The volatility of the downside will be as steep as it was to the upside with this.
Well, someday.
Anyway.
Someday.
That's the problem, is that it could go to 1,500 first, right? Like by no means is this a market forecast call. It's simply a call on huge volatility in the stock, both directions, right?
Yes, absolutely correct. Before we end here, I just want to give a shout out to our first listener there that with the 6 minute abs, he came up with the terrific side effects at the beginning. Thank you very much for passing those along. Yeah. It definitely helps you get your question answered a lot more when you come up with some great side effects like that. Thank you very much.
All right. Lena, where can people submit their questions?
So if you have any questions for Kevin and Patrick, please submit your questions to nostupidquestions@markethuddle.com.
So, folks, thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle. We're there every day. And go check out our merch store, I should say, now in here, Alina. You can listen to the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get our latest content. And please, if you could, rate and review us on iTunes. You guys know why. Patrick, where can they find you?
You can find me at bigpicturetrading.com, or you follow me on Twitter at Patrick Ceresna and Kev. Where can they find you?
I'm on Twitter at Kevin Muir. You can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in. Now stick around for the after show.
Oh, that was a long 3 interviews, man.
I know, I screwed up. It was almost 4.
Well, listen, we're gonna rate the beer in a second, but someone we know had a birthday in the past week.
Who was that?
I don't know, but Lena has a gift for that person.
Okay, what is it?
Just sit back and watch here, buddy.
Hey Kevin, it's Lindsay Lohan. I want to wish you a very happy birthday, and I also want to say thank you for sticking with Patrick through thick and thin, sending you all the love in the world. Have a fantastic birthday. God bless.
Now, for our listeners that don't know the significance of Lindsay Lohan coming on to do this, Kevin, in his macro tourist piece for the last how many years?
Many years,
has made numerous references because of his huge crush on her since 20 years now.
Like, it has been a long time. And you guys, that is literally the best gift that anyone could have got me. Thank you so much. I'm going to cherish it forever. I'm glad
we're going to get you a digital frame to put in.
I am glad that Lindsay does not read the Macro Tourist, because she'll realize that although I do have a massive crush on her, it's a little bit it's complicated.
It's a complicated relationship.
It's a complicated relationship. In fact, I'll tell you a story that when I first started writing my pieces, not that many people used to read them. I just threw it up there, and I didn't know if anyone was reading them. So I had more fun when I thought there was nobody reading them. And I met a fellow downtown that I had known for many years, and he admitted that him and his hedge fund buddies, they all read it and they enjoyed it, and they had a question though for me. And I said, sure, anything. And they said, well, we have a rather large bet going on whether you hate Lindsay Lohan or love her. And the room was evenly divided. It was half of them thought I was, that I was I thought Lindsay Lohan was terrible, and the other half thought I was madly in love with her. And I had to admit,
and now we have to tell the truth, which is
Lindsay Lohan. Listen, she's awesome. Don't tell me she wouldn't be fun. She would be fun. I don't care what anyone says. I'm going to own it. Yes, I have a huge crush, and you guys couldn't have figured out a better gift for me. Thank you very much.
No problem. All right, let's rate this beer. All right, so why don't you go first, Kev?
So it wasn't what I was expecting, and I don't know, for some reason, it's a little fruitier than I would have thought, but not in a sour type way. 6.9.
It's got the fruitiness that you would typically see like in an IPA without too much of the hoppiness in it, and it's a lighter drink.
Patrick, you're getting good at this. That's a good explanation.
I was just thinking the same thing.
Like, honestly, have you been watching reviews or something? That was really good. I'm really impressed.
But it's a 4.2%, right? And it's you know what? To me, it drank like a light beer, but left you with a little bit of an IPA aftertaste. And overall, like I would have no problem ever drinking these. Like there's nothing that I don't like about the beer, but I have a hard time saying that this would be a favorite. Like it's like this is if I was just drinking around, sitting around drinking, and I'm popping a few of these, this would be perfect. Like I'm gonna give it something down the middle. I'm gonna give it a 7.5.
Oh,
I'm just gonna go
Patrick,
straight down the
higher
middle.
than me.
Higher than you, but I with 7.5 being the midpoint, I just don't think it's anything worth giving a higher grade. But I don't want to shit on it because it's actually a good drinking beer. It's I'm gonna give it right down the middle. That's where I am.
There you go. It's just one of those shows.
Yeah.
Down the middle.
Down
so,
the middle.
Was this Lena's doing? Because this is pretty awesome. This Lindsay Lohan thing.
Yeah, it's all.
I was a little suspicious when I got a call from Luke asking me when my birthday was.
Well, I had a feeling it was the day that it was, but I wasn't sure. I wasn't sure 100%. So I was like, we need to figure this out. I had a feeling. I got it right, which was great. I don't know how I got that right, but
it was honestly.
Yeah, I never knew.
I couldn't have picked a better birthday. You know, as you get older, it's tougher to do things. And I always tell my wife, always asks what I want. And I always tell her charcoal gray Aston Martin Vantage, and it never comes. So apart from that, I always say just a sweater, and I did get that. But this is definitely one of those things that you can't put a price tag on this. On the fact that I am immortalized by Lindsay Lohan.
There you go.
It's awesome.
There you go.
We can get you a digital frame for the video to put in, and you could put it on your bedside table.
That is awesome. I'm going to embed it into my website or whatever. We have to put it in there. It's going to be part of Market Huddle lore. It's such a good gift. Honestly, I just can't describe how good a gift it is because I'm still just flabbergasted. It's so good. I'm sorry.
Oh, Kevin's fanboying.
I am fanboying. Okay, so what did you guys watch this week? Anything
I went to go
interesting?
see Bond last weekend.
Sorry,
New
what did you
Bond
say?
Movie.
Well,
No Time
how
to Die.
what did you think of it?
It was good. It was a great ending to, Daniel Craig being 007.
I heard it was one of his better ones.
I mean, I think all of his 007
I
series
liked
were
them.
good, but this was good.
You know what's funny? I've met some people that it's truly, you either think that Daniel Craig was the best Bond or you hate him and he was the worst. Like, there's not people, there's a lot of past Bond guys that are like the middle of the road and they say like and don't like and it was this and that. But I know people that hate him as Bond and other people that love him as Bond. I personally have always liked him as Bond. It's
I could
but
see that. He
they-
seems like your kind of guy. I could completely see that. He's kind of dark.
Yeah.
Like it's
Well,
dark, sinister. Like
They
it's-
really with his Bond series though they really up the action thing. Like some
Definitely
of the
more,
older
like, rough around
Bonds
the edges.
are more like a
They're
kind of
more like Austin Powers.
spy kind of thing.
Yeah, it's like
Yeah.
a sophisticated Austin Powers.
It's like a semi-serious Austin Powers. Instead of... I actually
Yeah, no,
saw
this is good.
something where they ranked them all. Like some film critic went and ranked them all, and I was surprised Roger Moore's did as well as they did. Because to me, that's
Really?
growing up.
I
that's
like-
who Bond was. That's when I was
Roger
the right
Moore?
age. Yeah, that was
Yeah.
the right age for me. Sean Connery was a little too old. I didn't watch them at Sean Connery, and I know most people say he's the best Bond. That's kind of, I would say, consensus. I don't know if he's the best Bond, but he's definitely the best on Celebrity Jeopardy. What is that one about your mother? Oh God, it's such a good skit. That is one of the better skits on Saturday Night Live.
It is by far.
Yeah.
But yeah, if you haven't seen it, you should go see it.
Yeah. Do you know what actually one of my favorite skits on Saturday Night Live that you can't find, and I don't know if it's a function of that they got in trouble from the actual artist, is you know they have VH1 behind the music?
Yeah.
Or it's something like that, but it was Will
Yeah.
Ferrell doing Neil Diamond
Oh, I haven't seen that
with
one, I
John
don't think.
Goodman.
I'm gonna have to.
And
YouTube
I
it.
think it is literally one of the funniest skits I've ever seen. I won't ruin it for you. I just think it's really, really dark, and I think it's hilarious. Oh, Lena, you're a big comedy fan. So I don't know how I got on this rabbit hole, and I started watching Jesse. Let me get it for you. Jesse Jalep. Let me just get it here. Jesse comedian. I should be ready for this. He's in all those roasts. You know those roasts?
Yeah. Celebrity like birthday roast.
Yeah, he's
or
one of the
whatever.
ones there. And Jesse Jill. I don't even know.
I'm not good at
Google's
names.
not very good here. Oh no, here it is. That's why it's not his name. His name is Anthony Jeselnik.
Anthony Jones.
Oh, Lena, you're gonna like it because I know you. I know you like Bill Burr. This guy is.
Yeah.
This
Speaking
guy.
of Bill Burr, he's coming to Toronto.
Oh, there you
next
go.
summer. I already bought tickets.
Oh, good for you.
Yeah,
Going
so
out,
we're gonna go
on
see
the town.
That's right.
Anthony Jeselnik. Go watch
this
him.
guy. Yeah.
Oh,
He's funny.
it's dark. It's dark, but it is funny.
Is there a Netflix special on him?
Oh yeah.
Is that?
Yeah.
Okay. I got
And it is pretty funny. I must admit I got kind of hooked on it, and I went through a whole bunch of things, and he says shit that you just you can't say. Like
Oh, he also went to the same school as Andrew Simon.
well, and do you know who else went to the same school as Andrew Simon? Kuppy.
Oh, is that right?
I was gonna ask, and then I realized they were a decade apart, and I was like, oh, he's not gonna know Kuppy. Right? It's also a big school. But anyways, go watch Anthony
cool.
Jeselnik. It's pretty awesome
will
stuff.
Definitely check it
Yeah,
out.
you Lena. I will be shocked if you don't love him and say this guy's better than Bill.
I will report back.
He's
next
better
week.
than Bill Burr. To me, he is much better.
Really?
Yes, I like him way better than.
That's a big statement you're making.
yeah.
I'm a
And then
big
what's
Bill
funny
Burr
is like
fan.
he's such a dick, but in real life, no.
So is Bill Burr.
But Bill Burr almost seems like a dick in real life, and this guy's a nice guy in real life. It's a complete act. I've seen him interviewed, and you're a nice guy. You're just this is a character you're
Maybe
playing.
that's the act. He's being nice on interviews. That's the act.
Maybe you're like thinking 3-dimensional chess, and you're already a move ahead of me. But because Bill Burr, if you listen to his podcast, you realize that you're like, you're kind of an asshole. Don't you think? It's funny you say that. I was listening to a podcast today, and he said something. And I was like, you're kind of an asshole.
Yeah, he can be a bit of a... Yeah.
Like, I like him, and I think he's got some funny jokes. Don't get me wrong. Yeah. And like some short, bald guy does well in this world, I got to support him.
You guys are in the same club.
Exactly. So I'm a big fan, but Anthony Jeselnik, give it a whirl.
Oh, I definitely will. I'll report back.
Yeah, okay. Patrick, what do you got planned for this weekend? Oh, how was Guelph with the Mennonites?
Oh, by the way, sorry. Before you continue, on Twitter, somebody had tweeted saying Guelph must be a bodily function, and I had to tweet back and send him a Wikipedia page of city of Guelph and.
Oh, they didn't know this with like they didn't. They're like, what's with you crazy Canadians with the names?
Yeah.
Well, listen, it's probably from England.
Ontario.
Almost everything's from England. Did you realize they have a Banff?
Oh, I mean, that doesn't surprise
me. Or
yeah,
it's in Scotland.
All of the...
Yeah, like, listen, all of Canada is basically named after England.
Yeah,
Banff, maybe it's Scotland. Let me just double check.
Brunswick, New Brunswick. It's like every yeah. It's
Banff is a town in Scotland. Well, you know, my daughter went to school there, and literally when at graduation, they go through all the names, and she went to a small town in Nova Scotia. And when they were dividing everyone up for COVID, they would have literally A to, let's say, M, and then they would have N to Z, and the M's needed their whole section because of the mix and max. Yep. And you think I'm kidding and that this is a joke, but it's not. Literally, they went in.
No, I believe you.
It's all mixed in max. Like, you're just, holy smokes, you have your whole section.
Oh, and she got lumped into that section.
Well, no, she was at I think that it was really M-A to M like C. Like, it didn't even
make
make
it. She was on the second batch.
Yeah.
That's awesome.
It's pretty funny.
Yeah.
But how was Guelph?
John Smith says, it was the H is silent. Smith. John Smith says hello to all you guys.
Oh, that's nice.
Yeah, I said he should come and make another appearance on the show at some point.
Is he coming for the 12 days of Christmas, or the 11, what is it?
The 12 pubs of Christmas.
The 12 pubs. Does he come to that?
You know, he's promised on many occasions.
And he's fallen down? He's like me.
No.
Like me.
He's made appearances, but he's done the amateur thing of showing up halfway so he can save face and go
and
the
carry
distance.
You home.
But
he shows up when he shows up late.
Yeah, so that way you don't do all 12 pints, and we're all sprawling messes, and he's like, "Oh, look at me, I'm like, no shit, you only drank 6 pints."
That's it. That's a degen move.
It is.
Yeah, you don't even pretend you're in the game if you're doing that.
Yeah,
Either you're there from the start or you're not there. Like Patrick's trying to get me lean, and I don't know. Him and his crew.
I think you should do it.
I don't know. His crew.
You should just come and say hello. You can do exactly what it. Just make an appearance. Say hello. Do a couple bars.
Just go and
disappear
make sure
when
that
you get.
Patrick doesn't fall on his face.
No, there's no stopping that.
That's a given.
Wasn't there some picture of you outside on a toilet?
Yeah.
Is that right?
Yeah.
Am I
Yeah.
No, you're not imagining it. It exists.
You're not imagining it. It was definitely the case. That was when I was wearing that sweater with Christmas lights on it. It was like the picture doesn't do it justice because I was like lighting up like a Christmas tree.
And the 12 pubs. Now, are we fully open? Are you allowed to do that? Or you guys are going to have to show each and every time your vaccination?
Oh, yeah. No, that's the problem. Is you're going to have to show your vaccination and ID going into each bar. And after a while, it's going to get really tough.
Have you got yours? Put it on your shirt.
Have you got yours on the phone? You should print it out, and you should have multiple copies, and you should give them to your friends.
Yeah. I think I think though that what we might do is not push it so hard. Maybe or keep it a smaller group. Like normally we have 30, 40 people show up. Like this time, if we kind of plan on download only the core people
The
show
core.
up, maybe we can
The hardcore.
The inner circle.
Yeah, the one where you just blow the conch
quite,
and it just like they appear.
I feel quite special that you still invited me, or do you want to rescind that?
No. You can make an appearance. I think it would be...
You can't come for the whole thing, Kev. I'm sorry. You
No.
can show up for
No,
one or
'cause-
two, but we know you're a lightweight, and then you're not going to come for the whole
I was
thing.
about to say, but more importantly, I think that your wife would never forgive me if you actually tried to do the distance.
The distance, 12. So what is it? It's 12 beers in
12 pints.
12 pints.
One pint every half an hour for
2 pints. Oh, that actually, people think that sounds easy, and it's not as easy
It's
as it
not.
sounds.
Oh no!
It's like the Century Club.
It is
It's
for the
hard.
first. Exactly. The first 4 or 5 pints, you are like, this is easy. I got this. By the time you're on the 7th pint, your body's like, no more, and you're like, no, we're going.
I wonder if the Century Club that's a Canadian thing or that's universal, like in all North America. And for those who don't know,
let's ask our American listeners.
Yeah, so people let us know if this is something you guys do. The Century Club is 1 shot of beer every minute for 100 minutes, which doesn't sound
with
that
no
tough.
bathroom breaks.
That's strict rule, Century Club. And I remember there was a couple engineers on my floor that did the Bicentennial Club strict rules, and I was mighty impressed because that's hard.
Okay,
200, no peeing, no getting up. Like, how many beers is that? I don't know, but it's
And what do you get at the end of it if you make it?
Oh,
through?
you just get to say that you
bragging
lied.
rights.
Yeah, that's it.
Yeah, street cred. That's it.
Street cred.
Street cred.
Stupidest thing ever. Kids, like, people are so dumb. Like, the fact that we thought this was smart. Like, think about that. And then what's even funnier is that some of us are almost 50 and doing the same thing. Just doing it with going to bars.
We do have washroom breaks in between.
That's right. I think you guys should up the game this year and play strict rules. No washroom.
Really? Ooh, that does.
Do you know
not
what? That gets
physically-
harder.
That is actually.
Whoa, 1 second.
No,
that
Somebody's
gets
gonna
way
lose a
harder
kidney.
as you get older.
Yeah, somebody's gonna.
I
lose
was
a
about
kidney.
to
That's
say,
not a good
like,
story.
I'm gonna tap out in 15 minutes.
I know, it's true. Do you find that when you were young, like you could go like hours without peeing?
Or just wear adult depends.
I cannot believe we're actually having this
that's all right.
conversation on there.
That's all right.
I'm gonna let you just comment. I'm gonna pretend like I didn't hear the question.
I still can make it through the night. That's the key. When you can make it through the night without peeing, that's a sign that you're not yet a boomer. Now watch that. I'm gonna what's gonna happen? Like this year, it's gonna be the year that I gotta pee like 4 times in the night.
Yeah, you're jinxing yourself for
exactly.
sure.
The market gods are listening. They're like, "Oh, fuck you! Listen to you running off your mouth." Okay, guys.
All right.
Well, we should go.
I'll wrap it.
Listen, thank you to both of you for the wonderful gift. It's truly, honestly,
happy birthday.
it's it's great being with both of you all the time. It's you guys have turned out to be terrific friends, and I don't want to get too emotional and stuff right now, but this gift just made my week and or made my month, made my year. Thank you so much.
Oh, happy birthday, buddy.
Thanks.
All right. Well, have a great weekend, everyone, and we'll catch you everyone next week. Cheers.